that, and I think, he has already looked at that. When it came to the election in November, he was in favor of cannabis, legalizing from a recreational standpoint in Florida. It didn't pass, but it's needed 60%, and I think it was around 53, 54%.
Why are you optimistic that he'll do this stuff during this term when during his first term there was a lot of optimism and a lot of hope from folks in the cannabis industry? I know you weren't at Tilray at that time, but there was a lot of optimism coming from the industry, and that ultimately did not come to pass.
So, listen, again, I think from a business standpoint, and he looks at it from two things. He looks at it from the tax dollars and the excise tax that come into place, and he looks at an illicit market that he takes off the street, and he gets real regulation in here, and he ultimately brings safe vaping in here, which allows money that's going through the banks from a regulatory standpoint.
Hear the full conversation on the latest edition of the Bloomberg Business Week podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com. From the financial capital of the world, broadcasting 24 hours a day, Bloomberg.com and the Bloomberg Business app. This is WBBR New York, Bloomberg 1130.
This is Horizons Middle East and Africa. Our top stories this morning. AI investment. SoftBank soars after President Trump announces a pact along with OpenAI and Oracle, forming a $100 billion joint venture. China markets on edge after Trump says 10% tariffs on all Chinese imports are still on the table and could start as soon as next month. And shares in Africa's biggest mobile operator MTN gain after Nigeria approves a 50% increase in tariffs. These are some of our top stories this morning. Good morning. It's just gone 9 a.m. across the Emirates. I'm Lizzie Burden in Dubai.
And I'm Jennifer Zavasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Lizzie, a lot of market-moving news. Of course, you mentioned the AI news we got there. There is, of course, the Netflix earnings. So a lot that we're paying attention to and that investors are watching closely this morning.
I definitely feel like I helped Netflix out with all my binge watching over the past year, Jen. We are going to keep an eye on the Netflix impact at the open on Wall Street. We have futures pointing higher stateside, 0.3%. As you say, we're also getting this boost from Trump's AI policy, feeling that in the Asian session, and we're looking for gains of 0.25% on Euro Stocks 50 futures as well. We've got 10-year US Treasury yield at 4.5%, Brent at $79 a barrel, so pretty steady. We did see losses yesterday on the dollar's rise as we digest the Trump effect. And if we flip the board, you can see more of that impact actually on what we have gathered as the Trump Tariff Losers Index. This is made by UBS, and you can see here the relief actually off the back of that day one lack of Trump tariff policy really, but a bit of a reversal perhaps coming now that he says he could slap China with a 10% tariff next month. Definitely a ticker that you want to be keeping an eye on. But let's go to Asia now. Avril Hong on standby for us in Singapore with a look at how markets are faring there. Avril, over to you.
Yeah, we're seeing a mixed bag. This continued recalibration to Trump among Asia equity markets, and we see how AI-related stocks are really doing very well today as he unveiled hundreds of billions of dollars eventually on spending for the sector, lower guardrails as well. So we have the likes of SoftBank, the big boost for the region's benchmark, climbing double digits by the most since August last year. And then you have AI construction-related stocks as well, I should say, that are tracking the gains in their US-Europe counterparts amid expectation of more infrastructure, nuclear power spending. China today is the market that is really underperforming, and this is after Trump reiterated that these 10% tariffs on all China imports, they're still on the table. I would just highlight, as someone pointed out as well, that this follows on from a string of gains for Chinese stocks, so maybe they were due for a breather anyway. And at 10%, they're still not as bad as the 60% that was previously floated for some of these Chinese tariffs. So keep that in mind even as we see declines in Chinese stocks as well as the currency today. Guys.
Okay, an interesting dichotomy between the fate of China equities this morning and the rest of Asia. We thank you, Abel Hong, over in Singapore. And let's dive in more deeply to that AI policy story. SoftBank, OpenAI, Oracle, all forming this $100 billion joint venture to fund an AI infrastructure program in the US. President Trump unveiled the initiative called Stargate, which is aimed at speeding US development of the emerging technology. We can get more now with Bloomberg News desk editor Jill Deasis. She joins us now for more. Jill, is this initiative actually new, or is it a Trumpified version of what was already there under Joe Biden?
Well, Lizzie, I think that this is pretty significantly different in really one key aspect here when you're looking at the policies that the Biden administration was pursuing toward AI versus the Trump administration, and that really comes in more of this removal of guardrails and sort of paring back of regulation on the AI industry. So I think it was the case that under the Biden administration, what you saw was a little bit more caution when it came to actually how to regulate AI. Obviously, there's a lot of really big, weighty, in some cases, existential questions about how exactly you pursue this technology, what exactly it means, what exactly sort of introducing this actually means to the world, and that if it, obviously, like there's still, I think, some conversations going on with that during the Biden administration. I mean, this is something that we've really only seen take off within the last couple of years, particularly after that sort of introduction of OpenAI's ChatGPT program. I think what you're seeing with the Trump administration, though, is they're very much more sort of like pro-business in the sense that Trump seems to want to remove some of those guardrails. This particular initiative, we're still waiting on a few details about, but it does seem like the idea here is it's this $100 billion investment involving OpenAI, involving SoftBank, also Oracle as well. There's some targets to sort of balloon that out to $500 billion worth of investment. Maybe Microsoft and NVIDIA get involved there, but it does seem like it's much more in line with what a lot of these Silicon Valley executives want, which are less guardrails on the system so that they can really sort of ramp this up and ultimately, I think, compete with China, which is obviously targeting AI-related initiatives very aggressively as well.
Yeah, well, Trump, of course, reiterating his threat to slap 10% tariffs on all China imports. Abel was talking about the impact in the markets this morning. China says it's going to import more. Jill, do you think it's fair to say that this is still a surprisingly warm start to the US-China relationship?
Yeah, maybe, Lizzie, although I still think we need to kind of, pare back from making any kind of like overarching judgments about what this says about the U.S.-China relationship. Maybe it's surprising in the sense that you would have expected Trump to say day one that there's going to be X number of tariffs on China. Now, obviously he's saying this 10% increase maybe as soon as February 1st. But at the same time, I kind of wonder how much of this is Trump rather, taking, as Trump is this gets, maybe even taking a bit of a calculated step to get people like Marco Rubio, Secretary of State, Scott Bessent, the nominee for Treasury Secretary, there involved in some of these conversations about how exactly you treat China. I mean, it's very fair to say that Trump went pretty hard on the idea of raising tariffs on China to as much as 60% on that campaign trail. So I really wouldn't discount the fact that this could be a relationship, these could be tensions that flare up. I think we've seen indications from China that they want to kind of smooth things over. They did send pretty high-ranking representatives to his inauguration, but we'll have to see what happens.
Okay, crucial context. Bloomberg News desk editor Jill Deasis, we thank you for that. But of course, there has been a slew of other announcements from President Trump. He says he's open to Elon Musk or Oracle's Larry Ellison buying TikTok as part of a joint venture with the US government. The social video app temporarily went offline over the weekend before the new president signed an executive order to extend the sale deadline by 75 days. Now, owner ByteDance has so far publicly refused to sell the business, but we should keep an eye on that. Over to you, Jess.
Absolutely, Lizzie. Yeah, let's get to what's happening in Davos. Aramco CEO says China is driving growth in global oil demand. Amin Nasser told Bloomberg that despite concerns about peaking consumption, demand from China will continue to increase year on year, driven by the country's appetite for chemicals produced from oil.
We're still seeing good demand coming out of China. We've seen it in 2024. We still anticipate, as I said, most of the growth, the 1.3 million, 40% of that growth will come from China and India. The rest is coming from the rest of the world. As I said, China, even when you talk about their movement to electric vehicles and renewables and all of that, they need feedstock to create the material that will be used in these electric vehicles and these carbon fibers and all of these things.
Let's get over to Davos now and speak to Bloomberg's Jumana Bersetchi, who brought us that fantastic conversation. Jumana, great to have you. You did speak with the CEO. What more did he have to say with regards to the oil market in 2025?
Yeah, morning, ladies. Well, it's not that often that we get a chance to speak to Amin Nasser, the CEO of Aramco, and obviously the world's largest state-owned oil fund. So really interesting person to talk to about oil market dynamics heading into the rest of this year. And I started off the conversation with him by simply pointing out, if we had had this conversation a couple of months ago, my starting point would have been a lot different, because Brent, of course, was trading a lot closer to $70 then. Over the course of the last couple of months, there's been more geopolitical risk premium priced in. And when I say geopolitical risk premium, here I'm referring to specifically the sanctions and anticipated sanctions, perhaps that could come through from the Trump administration. Earlier, a couple of weeks ago, one of the last decisions the Biden administration took was to start applying sanctions on Russian exporters, tankers, producers. And so that led to an uptick in the price of oil. I started off by asking Mr. Nasser how he sees the markets, and he said he actually sees it pretty balanced. And the signals, he said, coming through from China are still pretty robust. You may recall one of the reasons why oil was trading so subdued last year was people's bearishness about the Chinese economy. And of course, we did get that big fiscal push towards the end of the year. He is saying that out of the 1.3 million barrels per day demand growth that they see next year, 40% of that is expected to come from China, and mainly on back of their demand for petrochemicals as well. But we didn't just talk about that. We also spoke about the number one issue people talk about in the context of Aramco financials, and that is the dividends. Take a listen.
What we told our shareholders that whenever there is the market is right, and the prices is right, we will look at our free cash flow that we have. Pay from it whether required in terms of external investment, base dividend and progressive dividend, and there is 50 to 70% of that will go to the shareholders. So as in the chemical, always it's a cyclical market. Depending on the market at the moment will happen. What the promise is, based on their board approval, is 50 to 70% of the free cash flow after we take from it the base dividends and the external investment will go to the shareholder. Don't forget, the upside for Saudi Aramco is there.
Yeah.
We are investing big time in gas, in chemical. We are positioning the company for the future. The other thing that is the most important, we have 3 million barrels of spare capacity readily available to go on the market when the time is right, based on the target that we receive from the Ministry of
But
Energy.
that 50 to 70% number of free cash flow, if free cash flow is negative, doesn't get paid.
Well, so far we have a track record. Everybody talked about Saudi Aramco when we talked about the $75 billion. We had established a track record, as I mentioned, the $75 billion, and we went through the 2020, if you remember, the 2021, the pandemic and all of it. Track record is the best thing when you look at Saudi Aramco. We generate value to our shareholders.
Yeah.
We are positioning the company for the future. You look at our capital, gas is expanding by more than 60%, placing it in the right market. We're generating double-digit rate of return by placing it in the community. We are positioning, placing our barrels upstream in the right market with liquid to chemical conversion capacity. We are investing heavily in AI, in renewable in all of these things, and we're putting the capital while being able, for example, the guidance last year is close to 48 to $52 billion. We reduced it was 48 to 58, and then we narrowed it down 48 to 54 or whatever. But we are putting the capital, investing for the future in the different segments, in gas, in liquid to chemical, in digital, in renewable, in hydrogen, in LNG. So the company is going to be well positioned for the future, and we were able, with all of these huge capital investment over the last couple of years, to pay our dividends. So we established a good track record in terms of being able to pay our base and progressive dividend in the past.
Just finally, on that point, the dividend has been a huge source of revenue for the Saudi government. Could we expect to see more borrowing out of Aramco to continue to pay that dividend towards that would service the state?
No, I think if you look at your gearing, it's a below side. We always look at how much we can generate value by our bonds or sukuk or whatever. But at the end of the day, look at our gearing is around 2%. So we have low gearing, and we are balanced in terms of how much we borrow to ensure that we have a balanced portfolio, maximizing value to our shareholders, while, as I said, executing in our capital program, which is going to deliver value, because you are at the early stage executing all of these mega and mega projects that we are doing across the world in the kingdom. That is going to generate value to our shareholder over the long term.
Now, the background to that conversation, of course, the fact that many analysts out there are saying that Aramco's free cash flow pile is getting smaller, narrower and narrower. And some people are anticipating that it's going to turn negative, and therefore they will struggle to pay out the performance-linked dividends. I mean, Nasser is saying that their track record speaks for themselves. So when I asked about the potential for borrowing, he did say that their gearing is low. So it sounds as though they do have the potential to go to the markets if they do want to continue to honor that dividend. That's obviously my words, not his. And remember, this is the most important thing, it is an extremely important source of revenue for the Saudi government, part and parcel of broader conversations we've been having with the Saudis here about their spending plans. Great work from you and the team there in Davos. It's Bloomberg Shimano Bersucci in Davos for us. Shimano, thanks so much for joining us. Now, coming up, we have more on the show. Stick with us. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Good morning from our web headquarters in New York. I'm Menace Reddy.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stavros here in Sydney where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
We demand this complete free coverage. We've been waiting for this moment.
The opportunity of the century.
Join us on Bloomberg BA Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Optimism over more AI spending under President Trump has offset fears over China tariffs. Most of Asia, as you can see, is in the green, but Chinese shares are being hurt by a mix of macro and micro factors. Joining us is Isaac Poole, Chief Investment Officer, at Ascalon Capital, joining us from Tasmania. Thanks so much, Isaac, for joining us. Let's just get your sentiment on Chinese assets right now. Do you expect more volatility to continue, and where do you potentially see the opportunity then?
I think there's certainly going to be more volatility, and part of that's going to be linked to the uncertainty around tariffs. I think the will-he, won't-he sentiment that we're seeing at the moment on whether or not the threat of tariffs is just a negotiating tactic or something that's going to be implemented just means we're going to see gyrations in the market over the near term. And I think this isn't a case of all bark, no bite. I do think we'll see tariffs. And that's going to be a challenge for Chinese equities, even though they look reasonably valued. The prospect for real tariffs being implemented could be a challenge.
What does that mean for your positioning, Isaac? Do you stay away and perhaps, focus instead on the U.S. and tech in particular?
I think while China looks like there's some relative valuation there, there's just not a real clear catalyst to go overweight. So for those investors who have an exposure to China, we wouldn't be looking to add at all. And more broadly, in global equities, we think things look a little bit stretched, but there's this US exceptionalism that just keeps on delivering, certainly delivered in 2024. It looks likely to persist through 2025. So that means being overweight US equities still is probably the way to go within a slight underweight to global equities within a portfolio.
Well, Isaac, how much further can that exceptionalism really continue?
I think it's going to come under some challenge this year because we have seen growth top out. Even people are expecting reasonable growth this year, are expecting it to slow. We think there's a risk that it slows even further, and that inflation does come in a little bit more, meaning that nominal growth could be well below expectations. And if we do see that negative surprise on nominal GDP growth, it's going to feed through the earnings growth. And markets are pricing a big re-acceleration in earnings growth this year, and we just don't see what the catalyst will be for the broader index. And that introduces some downside risk, and valuations are such a stretch level right now.
Isaac, do you then potentially look to small caps or elsewhere globally, other markets, to then find other opportunities?
I think you've got to be really careful because for small caps in particular to really deliver, I think you're going to need significant rate cuts, and that's only going to be delivered if the economy slows, and that's not a great environment for smalls. Perhaps you could go down to mids, but we think the opportunity is to look outside of equity markets, take a couple of years of 20+% returns, lock away some profits, move a little bit underweight, and then for an investor in a diversified portfolio, look for opportunities that are undervalued. And for us, we think that's government bonds, especially with US Treasury yields banging back up at above 4.5%. That looks attractive to us, good downside protection, good income, and an opportunity to build a bit of resilience in portfolios.
Isaac, I want to end on the BOJ because we're waiting for the decision later this week. Potentially we get a dovish hike or a surprise pause. How is that potentially going to impact your portfolio and your positioning now?
I think we'll get a hike, but the scope for the BOJ to hike a lot this year is just dwindling away. I think growth will slow. They're going to struggle to get rate hikes up, and I think the risk is for Japan's economy to slow alongside the global economy. And so those big gains that we saw as people moved overweight Japan over the last couple of years could unwind. And we think it's an appropriate time to take some risk off the table in Japan and perhaps move to a slightly more defensive positioning.
All right, we're going to have to leave it there. Really appreciate your insights, though, this morning. Isaac Poole, Chief Investment Officer at Ascalon Capital, joining us this morning. Thanks so much.
Well, Jen, I want to pick up on the central banking theme and head straight back to Davos because Israel's central bank governor says that the country could see higher economic growth than forecast if the ceasefire between Israel and Hamas paves the way to a more sustainable regional agreement. Amir Yaron is speaking to Bloomberg's Lisa Abramovitz at the World Economic Forum. Take a listen.
We just had an interest rate decision with a forecast which already took into account that basically after the first quarter will be on what's called just ongoing security with intensity of fighting substantially coming down, and we expect the growth rate for Israel for 2025 to be around 4%, and in 2026 4.5% under that scenario. Now, obviously, we want to see all the hostages come back, and I hope the ceasefire is even a bigger turning point in the sense that we'll see after this horrible 7th of October day and the suffering on both sides sort of go away, but this can pave the way to regional arrangements, and if they are sustainable, they can facilitate rehabilitation, and they can, if they are provide sustainable security arrangement, they will promote growth, economic growth, and not just for Israel, they will promote growth for the region at large.
It sounds like you're skeptical that this really marks the end. It sounds like you're preparing, at least in terms of the economic outlook, for this to be maybe the end in extreme ongoing hot war scenario, but that the ongoing conflict isn't going anywhere for a while.
I'm not a military expert. But you know, our baseline scenario already incorporated the intense fighting is going to come down in the first quarter, and we're going to have sort of perimeter of ongoing security. But the more there is ceasefire, and obviously I'm elated about the hostages that already came back, and we hope all of them will come back, to the extent that that paves the way to more sustainable regional arrangements, and hopefully they can be backed by powers from the U.S., Europe, and others in the region. That will provide both security, it provides certainty. We know that economies want certainty, they don't like uncertainty. That by itself will promote growth. It will certainly help Israel, and if that's the case, we might have growth even higher than the numbers that I've just advocated, but it'll help the region at large.
So that was the Israeli central bank governor speaking to Lisa Abramovitz at Davos. Meanwhile, back home in Israel, the top general and his Gaza commander have resigned over the failure to prevent the October 7th Hamas attack. Their taking of responsibility may add pressure on Benjamin Netanyahu, the Prime Minister. Lieutenant General Herzi Halevi is to step down as Chief of Staff to the Israel Defense Forces in early March. Around the same time, the ongoing 6-week ceasefire with Hamas is due to end. Elsewhere in Israel, it has started a major operation in the West Bank city of Jenin, and it appears that attention is shifting from Gaza to the larger of the two Palestinian territories. The Palestinian Health Ministry said at least 7 people were killed in the raid yesterday and another 35 injured. The Israeli military confirmed the operation but provided no further detail. But those are some of our top stories. In the markets, as we head towards the open, we have futures pointing higher on both sides of the Atlantic this morning. It does seem that Donald Trump's back in the driver's seat. His pro-AI policy boosting risk sentiment this morning. We'll have plenty more from Davos next. Stay with us. This is Bloomberg.
Influential conversations from Bloomberg Television. Here's Jonathan Farrow.
Former IMF chief economist Ken Rogoff, you wrote a piece in the South China Morning Post, I believe, questioning whether we could see the same boom this time around as we saw last time around. And I want to be clear, and I'm going to do this for you and give you some credit. Back in 16, 17, you weren't pessimistic on the Trump economy going into it. You were somewhat constructive. Your peers were very, very downbeat. So what's changed for you personally?
If we're just looking at policies, the things that he did in the first term, I think on the whole, were constructive, as you say, for the economy, deregulation, the tax cuts, getting rid of the state and local, deduction, I think was actually a good move over the long term. And this time, every campaign practice would promise practically is something counterproductive. I mean, you could go to tariffs, Social Security being not taxed, and on and on and on. So, it's less obvious that he has the same room to run with his policies. And when he came, interest rates were zero. And now they're not. So he has a lot of constraints that he didn't face the first time. So I don't think we can expect quite the boom that we got the last time.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and the Bloomberg mobile app, or check your local cable listings.
You can't escape a traffic jam. Know what else you can't escape? Seasonal allergies. And you might think you can avoid that coffee stain until... No, really. You can't escape a lot of things in life, but you can escape prediabetes. Prediabetes captures 1 in 3 adults. There are usually no signs of prediabetes. In fact, most people don't even know they have it. But with early diagnosis, you can change the outcome and prevent or delay type 2 diabetes. Take action by taking a 1-minute risk test at doihaveprediabetes.org. You might not be able to escape having this song stuck in your head, but you can escape prediabetes. Go to doihaveprediabetes.org today. Brought to you by the Ad Council and the Centers for Disease Control and Prevention. Take your Bloomberg Radio listening experience to the next level. Download the Bloomberg Business app today and listen on Apple CarPlay or Android Auto. Get live radio, podcasts, and on-demand news updates, no matter where you are, from coast to coast and across the globe. Plus, expanded details on your favorite shows at the click of a button. The Bloomberg Business app, now on Apple CarPlay and Android Auto. Download it free in the Apple App Store or on Google Play. Bloomberg Radio. Context changes everything.
This is Horizons Middle East and Africa. Our top stories this morning. AI investment. SoftBank soars after President Trump announces a pact along with OpenAI and Oracle forming a $100 billion joint venture. China markets on edge after Trump says 10% tariffs on all Chinese imports are still on the table and could start as soon as next month. And shares in Africa's biggest mobile operator, MTN, gain after Nigeria approves a 50% increase in tariffs. It's just gone past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm in Dubai. It's just on 9:30 a.m. Welcome to Horizons Middle East and Africa. And Jen, it seems like these markets are still digesting all of the Trump policy that we've been getting so much in just the first couple of days.
I know, and I expect that to continue, Lizzie. As do markets, I think, for the most part. Listen, we did have the first full day of the new Trump administration, and as you mentioned, investors are still digesting a lot of what's to come and what he is saying. But if we look at U.S. equity futures right now, tilting higher ahead of the open later today, we did see on Tuesday, it was largely a positive, upbeat day for Wall Street. We did see most of the indices closing in the green, supported, of course, by that more bullish tone on AI. We also got those Netflix record earnings, so potentially some upside for equities to come. When we take a look at the U.S. 10-year, we are seeing yields tick up ever so slightly right now at 4.59%. But on Tuesday, we did see yields falling 5 basis points just a bit. So again, still reacting to some of that news that we're getting out of Trump. As is Bitcoin, as you can see on the screen right now, down more than 1%, but did spike over $109,000 earlier in the week before settling down now just about 105,000. Brent crude stabilizing at just around $79 a barrel. And also another asset potentially or looking like it's having a strong start to this new Trump administration is gold. If you take a look at it, it's holding near its highest levels since early November. As these tariff threats intensify, perhaps investors are looking at more haven assets. And yesterday we did actually see bullion surge more than 1% right now. That is just a look at what we're seeing with gold over the past year. Let's take a look, though, closer at what's happening in our China markets. April Hong is standing by in our Singapore studio. April, what are you watching?
Well, as you say, with those tariff threats intensifying, that's really played out for Chinese equities today that are underperforming when the rest of the region is sort of riding this AI wave. CSI 300 is down, and this is against the backdrop of Trump saying 10% tariffs on all China imports. They're still on the table, and you kind of tie this with the fentanyl that's entering the U.S. via Mexico and Canada from China. I thought I'd put things in a further perspective for you. So this chart, courtesy of MLive Sangwoo Park, shows you that actually when you look at the Bloomberg Fear Greed indicator, yes, the sentiment is still bearish from CSI 300, but it's actually eased off. So a signal, suggestion that maybe some of the extreme fears of a full-blown U.S.-China trade war, maybe that has eased off a little. Of course, we're talking about Trump here, so everything could quickly change from a late-night social media post, and the only thing we can really be sure of is the volatility. So some things to keep in mind, even as we see the losses in Chinese equities today.
Absolutely, Abraham. Day one, we should point out for the Trump administration. Great to get your perspective there in Singapore. Let's cross back over, though, to Davos. JP Morgan says it has deployed teams working overtime to analyze the impact of the early outlines of the policy shift under U.S. President Donald Trump. Speaking on a panel in Davos, the bank's asset and wealth management chief, Mary Erdos, said the Trump administration is creating what she described as a very pro-business environment and that the U.S. economy is in, quote, go mode.
The last 24 hours are just showing that there's going to be a lot of changes that we all have to digest. At JP Morgan, we have a war room set up to analyze and evaluate each and every one of these. So they've been up all night and are working on it. And I think that, time will tell.
Let's go back to Davos and bring back in our very own Jumana Bersetti. Jumana, that was another fascinating discussion that you had yesterday. And so many of the themes that we're seeing around Davos are around Trump and these new policies. Talk to us about what some of the reaction is, though, from the people that you're speaking with.
Yeah, well, you just played a little bit of sound from the panel that we did yesterday, that banking panel. Really strong comments there from Mary Erdos, who runs JP Morgan Asset and Wealth Management business, saying it's go time, essentially. And this is the feedback that I'm getting from most of the U.S. executives that we've spoken to around here. People are really excited about what the next year is going to bring. They think that the Trump administration is very much pro-growth, pro-business. But then one sort of element of concern has been whether there's already too much baked in, as in the forward path of all of these measures that the Trump administration is going to take may be already discounted in the market. So there is a question over valuation here, of course, as we've been talking about in markets. But I think one of the other developments is, say, from a green and an energy transition standpoint, over the years, and I've attended several Davos events, there has been a lot of focus on what the world is doing to help and aid with that energy transition. And the fact that one of the first decisions that President Trump took was to pull out of the Paris framework was a bit of a blow to anyone in that space. I asked Standard Chartered CEO Bill Winters about that on our panel yesterday. Take a listen.
Importantly, I think, while there's been a clear shift in narrative, in particular in the U.S., also some other places, as far as I know, no banks have withdrawn their commitments to supporting a transition to a net zero economy, nor have any of the large oil-producing countries. Obviously, Qatar being one, has got a fantastic sustainability program, because in the long run, it's pretty clear that we need to disgorge ourselves from the reliance on fossil fuels. But when we set this up at Standard Chartered in the beginning, it was two prongs. One was we've got to do our bit to do the right thing vis-a-vis our clients, because they want to transition to a net zero environment, but it requires massive investment. That's what we do. We come up with those dollars. But two is we make money, right? It's a big business for us. And we made we gave the guidance externally a couple of years ago. We make $1 billion in income by 2026. We'll be pretty close to that in 2025. It's just a big business, and it's a profitable business. So I don't want to sound too mercantilist about it, but we do the right thing and we get paid for it. It's kind of win-win.
Yeah. Mary, I don't know if you want to weigh in on that and whether you think that the requirements that are being put on banks have been a lot and too onerous. And to Bill's point, it doesn't necessitate you actually being part of an alliance for you to stick to the climate commitment.
Absolutely not. I mean, I think on the climate front, everyone wants a green planet, and so we're all working towards that. But you have to have energy security, you have to have proper energy transition, and you have to have public and private partnership, and all of us are working towards that. We don't need different bodies of people to come together to tell anyone that. Our clients ask us to do that. We're one of the largest financiers of the green economy. We finance 1 in every 4 deals. We would do more if the other people on the panel weren't so competitive with us. But it's very important that we all invest.
The background to that there is, of course, many of those U.S. banks have actually pulled out of that net zero alliance, the climate alliance. But JP Morgan was one of those banks, by the way, and that was Mary reiterating that they're going to stick to their commitments. They just don't have to be part of a formal alliance. And they're very committed to continue with green lending. So lots of conversations being had here on green energy, on the return of Trump, on geopolitics. Also, artificial intelligence has been a major theme. As you can imagine, the theme this year is collaboration in the age of intelligence. But I also just want to flag, I've got another major panel coming up today about the future of interest rates. So this one is going to be a fun one, given all of the news that has come through over the course of this week and the pricing, or repricing, I should say, of interest rates that has occurred over the last couple of months. So I've got the likes of Nicola Tangent, the Norges Investment Bank, so the Sovereign Wealth Fund head, Villeroy de Gallo, and a bunch of other names. So watch out for that. We'll see what they say about the future of interest rates and where they're going.
Really looking forward to that. And again, Jumana, great stuff there in Davos for us. That's our Jumana Grossetti in Davos. Now, coming up, Zambia is looking to deepen ties with oil-rich Gulf nations. We'll discuss details on the country's plan to quadruple copper production. This is Bloomberg.
One day have become a football coach at the NFL.
I could have. I probably wouldn't be with the Jets anymore after, as you know, their tenure doesn't last very long, so I think I made the right choice there.
February 20th, Donald Trump will be sworn in as the 47th President of the United States. Bloomberg will have special coverage of the historic inauguration, live from Washington, D.C. It all starts at 11 a.m. Eastern. Context changes everything. The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Welcome
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. Now, we've had a recent trade pact between Kenya and the UAE. We've also got Zambia looking to deepen ties with oil-rich Gulf nations. A lot of interest in this relationship between Africa and the Middle East. And we can speak now to an expert on it. We have Runa Alam, who's co-founding partner and CEO of DPI. She joins me in the studio. Really good to have you with me, Runa. I just really want to ask why investing in Africa is so interesting from a Middle East perspective right now.
It's very interesting because of some of the macro trends in Africa. So there's no other region in the world with the sort of population growth in Africa. By 2050, a quarter of the world will be Africans.
That's an amazing statistic.
It is, and when you combine that with the growth in GDP, for the first time in 2027, Africa will be the fastest growing continent, surpassing Asia. Fastest urbanization in the world, 500 million people were moving to African cities. Urban people consume more. So the real big story in Africa is combined population growth, GDP growth, urbanization, and you have the African consumer, which is growing. And in any products that are to the African consumer, there is a supply-demand gap, and that is where we invest. A lot of private capital invests, and that's the interest in Africa. Now, when you talk about the Middle East, Africa and the Middle East are neighbors, and that's where it starts. Years ago, we saw the Middle Eastern sovereigns, institutions investing in food security. That has blossomed in the last 5 years to investing in all sorts of different industries. So you mentioned the Kenya pact, but actually UAE is the largest investor in Africa now after the investment in Egypt, which stabilized the macro in Egypt.
Well, where you mentioned about the population growth, I presume that the demographic skews young. How do you really make the most out of that financially? What sectors, which countries do you target?
Right. So the average age in Africa is 19 years. And with the youth and the demographics, you have sophistication in anything tech. So we focus on the African consumer, pharmaceuticals, agribusiness, anything in education, etc. However, we add the element of digitalization. So in Africa, with the sophisticated young people, majority of Africans now have smartphones. Internet penetration has increased 5-fold in the last few years. With that, there's an opportunity to put digitalization into companies so you actually have growth in revenues, growth in EBITDA, and then when we exit, as we're private equity fund managers, essentially we can get a hike in the multiples. So that together is a big opportunity.
Runa, hi, this is Jennifer in Johannesburg. Great to get you on again. I did want to ask, though, about your outlook for 2025, because in 24, we did see deal activity slow. We saw funding slow for a number of companies here. So what does that mean, then, for the outlook for the rest of this year?
Absolutely, Jen. Good to see you. So what we're seeing this year is a slowing down in some of the macro problems. So inflation has come down from last year in 2023 in almost every part of Africa. Morocco, East Africa, South Africa, after these successful elections there. And we're really keeping our eye only on two economies, or large economies, Nigeria and Egypt, where inflation is still high. But good fiscal and macro policies in Nigeria and the significant investment from this region, the UAE, into Egypt has also moderated that. So we'll keep our eye on those two large economies. We do see macro improving. We also see the consumer story, as just talked about, really accelerating. So really the sectors we're focused on is pharmaceuticals, financial institutions, anything in fintech. Those are some of the biggest areas we're looking at. So those are the trends generally that we're looking at in Africa.
Runa, I wonder how you see geopolitical activity affecting what we see within the PE and VC space in Africa, because that will inevitably affect investment.
Yes, you're right. So Africa is getting increased attention. So several new countries joined the BRICS coalition. South Africa is the president of the BRICS right now. The African Union was invited to join the G20, and actually that's where the presidency of South Africa comes in. That sort of attention means that there is geopolitical attention on Africa. That increases companies from those countries coming into Africa. Often we find investors from those countries buying our companies. If you look at the Middle East, for instance, where obviously we are today, you're seeing increased activity into Africa, and some of it comes from the attention on Egypt, geopolitically and also as a big economic driver in Africa. So we're seeing our companies in Africa buying in Saudi Arabia, in the UAE, joint ventures, buying in Turkey. We're seeing increasingly sovereigns from this region buying our companies as we're exiting. So lots of links between the two regions, and we're seeing it really in a significant portion in our portfolio.
And Runa, just talking about your portfolio, MoneyPoint was the latest unicorn here on the African continent. Do you expect more unicorns then to come from this year, or should we just then expect more M&A activity as you were just alluding to?
I think you're going to see both. So you are going to see increased tech activity, which of course is the basis of unicorns. So great entrepreneurship in Africa, increasing amounts of money I expect this year going into the tech sector, the digitalization sector. Last year there was a slowdown in that, and that increases the chances of unicorns. At the same time, M&A activity is not going to slow, and even within the tech sector. So we see PE companies buying venture capital companies. We see large unicorns looking at bricks and mortar. That will continue. We also see between the Middle East and Africa increasing familiarity and also increasing M&A activity.
Runa Alam, great to get you on the show. She is a DPI co-founding partner and CEO. Always great to speak with you, Runa. Thanks so much. Now, coming up, MTN Nigeria says MTN Nigeria shares surged after the government allowed telcos to lift tariffs for the first time in 12 years. The details on that next. This is Bloomberg.
Start your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond. These are companies that are growing their market.
The companies hitting the cut, yes, that's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative. If you have bad earnings reports, you're in a good punch.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
There is this real momentum from Wall Street. We're basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Romaine Boston in Detroit, and this is Bloomberg.
Bloomberg Invest is back. Join me, Shomali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at BloombergLive.com/invest.
Season is here.
Kicking off
earnings season. There's a lot going on. Bloomberg is first to break the numbers.
Across KLM.
NatWest well above estimate.
We have further earnings coursing from GSK.
With the smartest insights.
Clearly, the macro and geopolitical front is full of open issues that they come all together at one stage. They can create some dislocation.
Is that why you're cautious about the fourth quarter? Continuing coverage on Bloomberg. Context changes everything.
Welcome back to Horizons, Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Now, MTN Nigeria shares have surged as much as 10% after the Nigerian government raised telecom tariffs by 50%. The adjustment, the first in 12 years, is half of what companies had asked for as they seek to weather harsh economic conditions. For more, let's bring in Bloomberg's Andira Obanga, who's following this story for us from Kigali, Rwanda. So, Andira, what did it take for the telcos to actually get the Nigerian Communications Commission to hike these tariffs?
Hi, Jen. So the best way to sum it up is a tough economic environment. If you look at inflation, it has hit a 30-year high. If I take you back to November of 2024, it clocked at 4.6%. And this affects the prices of basic goods and services, including labor. Then you have the currency that has had a really tumultuous run. Last year, it lost 41% of its value to the dollar. And this also increased the prices of goods and services. But also, what it did is it led to FX losses for both big and smaller telcos, Airtel and MTN included. And the Ministry of Information was speaking, saying this is really warranted because if you look at also sectors like energy, the prices of fuel have risen astronomically, and it only makes sense. However, previous efforts by telcos to increase their tariffs have been met by hesitation, particularly from regulators. And you have these telcos making a case for themselves, saying that the current pricing mechanism wasn't aligned with economic realities, and it was going to hinder sustainability in the industry, forget profitability, just day-to-day operations. And that's why we've seen this upward hike. The Nigerian Communication Commission is saying that this upward adjustment will go into supporting continued investment into the industry in terms of infrastructure and also innovation.
Sure, and Andira, the other factor of it is thinking about how it's going to affect the telcos themselves, and then also the end users. Do you have any insight into potentially what the benefits and the risks are?
Jen, there are far-reaching benefits to the telcos and also the end users in the long run. First of all, you mentioned in the intro that because of the upward adjustment, we saw MTN shares rise by 10%, and it was trading at 256.30 naira. And despite the fact that this upward adjustment is half of what they were asking for, Avia Capital says that it's still 10 to 20% above what they had factored in for 2025 earnings for MTN. And so in the short run, in the first couple of months, they're likely to see a negative effect. But in the medium term, it's likely to support medium revenue growth of over 30%. Other benefits include the proceeds will give them enough money to expand their base stations. They'll be able to roll out 5G coverage across different parts of the country, particularly rural areas, and also increase capital expenditure. However, on the flip side, end users can expect higher prices, which could trigger inflation in the short run. But then if you think about increased capital expenditure investment, if you think about improved quality of service, then this could increase productivity, and we are likely to see that offset the impact of inflation in the medium term.
Yeah, definitely a space we'll watch closely. Bloomberg's Andira Obanga for us in Kigali. Thanks, Andira, as always, for your reporting. Now, here's a few other stories we are following. ArcelorMittal's plans to shut down a century-old steel mill in South Africa are holding President Cyril Ramaphosa's dream of an infrastructure boom to ransom. The plant and two others it wants to idle supply what builders need for the rollout of power transmission towers, rail lines, and new roads. Ramaphosa has said he wants to turn the country into a, quote, construction site. And Congo's army says M23 rebels have tightened their stranglehold over key trading routes to the city of Goma in Eastern Democratic Republic of Congo. The rebels have been expanding their territory with the help of soldiers from neighboring Rwanda. The fall of the town of Minova puts the militia within 40 kilometers of Goma along the Rwandan border. And Turkey has declared a national day of mourning after a fire at a hotel in a ski resort killed 76 people. At least 51 were injured in the blaze, which broke out around 3:30 a.m. on a restaurant floor of the Grand Kartal Hotel in the resort of Kartalca. The fire quickly engulfed the rest of the 12-story building, taking around 10 hours to control. Now, let's take a quick check at what our markets are doing just ahead of the trading day right now. As you can see, a bit of green, a lot of green on the screen right now, at least for U.S. equity futures, pointing it to the upside. Still, markets are digesting a lot of the commentary that we are getting from President Trump on those supposed tariffs. And there is, of course, the other factor of tech, of the AI investment, and also of what we're seeing with a lot of the earnings companies. So a lot to pay attention to for the rest of the trading day. But that is where we leave it for Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg with Lizzie Burden in Dubai. Stick with us for Daybreak Europe.
Get the best in finance, investment, and economics with the Bloomberg Podcast channel on YouTube.
We are seeing stocks rise around the world.
We have a massive rally in the bond market.
Record revenue out of Apple.
We've got inflation moderating.
I'm Tom Keene, inviting you to watch and listen to the best analysis on business and investment. Visit the Bloomberg Podcast channel on YouTube to hear from the smartest names on Wall Street. Just head to YouTube and search Bloomberg Podcasts today.
When it comes to making plans, you are the best. What about those round trips, which are perfect on your way there and perfect on your way back? Or those meetings with friends, surprise parties, camps, birthdays? The same way you plan for the important moments, start planning to protect you and your loved ones from a natural disaster. Sign up for local weather and emergency alerts. Prepare an emergency kit and make a family communications plan. Get started at ready.gov/plan.
Brought to you by FEMA and the Ad Council. Did you know Bloomberg 1130 is on Amazon Alexa? Get live business news and market headlines 24 hours a day anywhere you have an Alexa device. Just say, Alexa, play Bloomberg 1130.
Life is full of moments, from first steps, first loves, moments that make life special. Now, life can also bring us difficult and disruptive moments like a cancer diagnosis, which is why the groundbreaking work of Stand Up to Cancer is so vital. They know the problem of cancer won't be solved by one doctor, one lab, or one hospital. It takes collaboration. That's why Stand Up to Cancer brings together top minds from different fields to find new and better treatments so patients can thrive. So when it matters, we can all show up for moments of a lifetime. Please join Stand Up to Cancer and Myrtle Beach to help families get back to where they belong, making new memories for years to come. Please go to standuptocancer.org to see how you can join the mission.
World-class journalists, global leaders, influential thinkers, cutting-edge data. January 20th to 23rd in Davos, Conversations at Bloomberg House will provide the context you need on the biggest stories that will shape the year ahead. From AI and the future of tech to geopolitics, markets, sustainability, inequality, and more. Join us in person or watch live. Visit BloombergLive.com/BloombergHouseDavos to learn more.
From the financial capital of the world, broadcasting 24 hours a day, Bloomberg.com and the Bloomberg Business app. This is WBBR New York, Bloomberg 1130.
This is Bloomberg Daybreak here for this Wednesday, the 22nd of January in London. Coming up today.
China in the firing line. Donald Trump threatens the world's second largest economy with 10% tariffs.
Going interstellar, the new US president launches Project Stargate, a potential $500 billion plan to fund US AI infrastructure.
Netflix and Thrill, live sports and Squid Game drive the streaming giant to a record quarter.
Plus, sending vote smoke signals. UK government ousts the chair of the country's competition watchdog to help probe business decisions.
That's all straight ahead on Bloomberg Daybreak Europe, on DAB Digital Radio London, Bloomberg 1130 New York, Bloomberg 99.1 Washington DC, Bloomberg 92.9 Boston, Sirius XM Channel 121, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Good morning from London. I'm Caroline Hetker.
And I'm Stephen Carroll. This is Daybreak Europe live on London DAB Radio.
Let's start by looking at the markets. The Bloomberg Dollar Spot Index this morning is slightly higher. President Trump reiterating the idea that he will impose tariffs on China. That has seen a sell-off on the CSI 300 down by almost 1%, and the offshore yuan is also dropping 0.2% this morning. Yesterday we saw Treasuries hold their rally, closing 7 basis points lower. Netflix shares climbed 14% after market, and US stocks also rallied up by 0.9% at the end of play yesterday. European stock futures this morning are up by 0.2%. Those are the markets.
Our top stories. Donald Trump says he is still considering imposing across-the-board tariffs on Chinese imports. Speaking at an event at the White House, the newly installed US president said the tariffs could be just weeks away.
We're talking about a tariff of 10% on China based on the fact that they're sending fentanyl to Mexico and Canada.
Beijing imposed restrictions last year on production of chemicals used to make fentanyl after pressure from the Biden administration. Trump's comments came just a day after he notably left the world's second largest economy off a list of imminent targets for tariffs. Trump also singled out the European Union in comments on Tuesday, which he said was very, very bad to the US, adding, quote, they treat us very, very badly, so they're going to be in for tariffs.
Donald Trump has announced a US joint venture with SoftBank, OpenAI and Oracle to fund the expansion of US AI infrastructure. Dubbed Stargate, the project will deploy $100 billion immediately, with plans to increase that to at least $500 billion. Bloomberg Intelligence senior tech analyst Mandeep Singh explains how the money will be deployed.
All these hyperscalers, we know, they have spent about $240 billion in 2024. And now think of it as additional, $100 billion that will be invested in building compute capacity. And all of it is going to OpenAI. So I think that puts them at a big advantage in terms of, the foundational model players. When you compare them to Google or Anthropic or Meta.
As Mandeep Singh hinted at there, OpenAI will oversee operations. Initial equity will come from SoftBank, OpenAI, Oracle and Abu Dhabi state investor MGX, with a build-out of the first computing system starting in Texas. The announcement comes after Trump rescinded Biden's sweeping executive order on AI, and so halting the implementation of key safety and transparency requirements for AI developers.
The US President suggested he'd be open to Elon Musk or Oracle Chairman Larry Ellison purchasing TikTok in a joint venture with the United States. Donald Trump said the buyer would give half of the company to the US government in exchange for being allowed to operate.
This is money that normally would have gone to China or other countries, but in particular China. In total, before the end of my first full business day in Washington and the White House, we've already secured nearly $3 trillion of new investments in the United States, and probably there's going to be 6 or 7 by the end of the week.
Donald Trump was speaking after the weekend where TikTok temporarily went offline for users in the United States. Trump then signed an executive order on his first day in office to extend the deadline for a sale by 75 days. The platform's Chinese owner ByteDance has publicly refused to sell, though prospective buyers hope the Supreme Court's ruling and brief shutdown could push it to reconsider.
Well, amid the slew of announcements from the White House, the president also discussed the ongoing conflict between Russia and Ukraine. Donald Trump said that he would probably impose sanctions on Russia if Vladimir Putin doesn't come to the table to negotiate. The news comes as Ukraine's Volodymyr Zelensky praised President Trump's ambition to expand U.S. energy exports.
Right now, things are on our side. President Trump is going to export more energy, but Europe needs to step up and do more long-term work to secure real energy independence. You can't keep buying gas from Moscow while also expecting security guarantees, help, and backup from the Americas. That's just wrong.
Ukrainian President Volodymyr Zelensky speaking there at the annual meeting of the World Economic Forum in Davos. He went on to refer to the US as an indispensable ally and called on Europe to become more self-reliant and develop its industry.
Netflix has reported its biggest quarterly increase in subscribers in its history. The streaming giant added nearly 19 million customers in the last 3 months of 2024. New live sporting events and the return of hit Korean show Squid Game helped the company nearly double the analyst estimate. Bloomberg's Caroline Hyde says it's a blockbuster number.
They've added on net 41 million more people around the world over the course of this year. I mean, this is better than they did during 2020, in the onset of COVID, when we were all suddenly trapped in our homes and had nothing else to do.
Hyde adds it's the last time we'll ever get subscriber numbers if the company intends to stop releasing them. Netflix shares rose as much as 14% in extended trading.
Now, in the UK, the government has ousted the chair of its Competition Markets Authority, Marcus Rockenring, in a bid to show the business world that it is serious about economic growth. Bloomberg was told that the ministers had been underwhelmed by the CMA's proposals to deregulate. Bloomberg's James Wilcock has the story.
There's a new villain in Westminster. Government ministers have been calling on regulators to give businesses more leeway for months. Now, frustrated with the response, they've decided heads must roll. It's a clear signal from the UK government. It wants to be seen as pro-business and wants to boost the economy, but will, in the face of the regulator, drive new policy. In London, James Wilcock, Bloomberg Radio.
So, in terms of the CMA, we've seen, of course, former Amazon executive Doug Gert being appointed on an interim basis to the CMA, and we'll perhaps hear something of that when we hear from the Chancellor Rachel Reeves, and also the business secretary Jonathan Reynolds in an hour's time, but they will be speaking to Bloomberg's editor-in-chief John Micklethwaite at Bloomberg's event in Davos.
Well, those are your top stories on the markets. Yesterday we saw the dollar wiping out earlier gains to close flat on the day. On Wall Street, stocks climbed into the close. The S&P 500 rose by 0.9%. We mentioned the rise of Netflix shares post-market. Treasuries held their rally, closing 7 basis points lower. Today they're holding at that level, 4.58% on the 10-year. Oil prices slumped yesterday. WTI fell over 2.5%. It's down another 0.5% this morning at $75.47. Elsewhere in Asian trading, we have seen the dollar touch stronger after those latest signals from Donald Trump about tariffs on China. The offshore yuan has weakened 0.3% versus the dollar as well, and the CSI 300 index of Chinese shares is down by 1%.
Well, we'll bring you more on Trump's tariff threats in just a moment, and we'll also be going live to Davos to hear what's happening in a packed schedule today. But another story that's caught our eyes, had loads of attention in the newsroom this morning. Having boasted about being among the top players in the world for a couple of very well-known video games, Elon Musk has now admitted that he has used level boosting services. What are level boosting services?
One of those things where I think that I am 150 years old because I have never heard of this, but it is.
Really?
No, I know, I'm very ignorant. This is people, essentially you pay someone else to play the game for you.
Yeah. Well, you can pay. Sometimes people are not sure whether Elon Musk actually paid or whether people might volunteer and done it for free, just to sort of be close to Elon Musk. He has spent quite a long time boasting about his proficiency in a couple of games, and so that's why it's in the gamer world, it's had a lot of attention. I'm not an online gamer, I must admit, but I do love other games, card games, board games. I'm totally obsessed at the moment with backgammon. Anyway, that aside, I think the reason this story is so fascinating is that it shows you a lot of things, you know. In terms of competition, whether you think that cheating is worthwhile, possible, whether you should do it or not, whether it shows,
admit to it.
Yes, admit to it, whether it shows something about your real world personality in terms of your gaming profile or not. I think that's why it's kind of sparked so much interest in Elon Musk.
Let's discuss that another day on the programme. Let's go back though to our top story this morning now with President Trump initially focusing tariff threats on Canada and Mexico, but on Tuesday the President also discussed imposing 10% tariffs on all Chinese imports at the start of February. That's had an effect on the Chinese markets. We can discuss further now with Bloomberg opinion columnist Karishma Vaswani, who has written extensively about Trump and Xi's relationship. Karishma, great to have you on. How does China view the threat of tariffs, which now seem to be materializing under Donald Trump?
Well, to put it simply, they don't want them. They've talked in the past about how this is being viewed as a way to pressure the Chinese economy, but more than that, they have consistently said, even during the Biden administration and of course during the first Trump administration, that the U.S. is out to keep China down. And what they mean by that is there is a growing sense amongst the Chinese establishment that the United States is not happy watching China's rise, neither in terms of economic strength, but also in terms of its influence, particularly in this part of the world, in the Indo-Pacific. Now, what we've seen from the Trump administration is very much to be expected. You know, there were campaign promises made about imposing tariffs on China, and it looks like those will materialize at some point. But to me, what was really interesting was the relationship that was tied to the export of fentanyl from China with regards to the tariffs. And this is something Donald Trump has talked about extensively before, and something I think he will continue to hammer home to the Chinese as a way to sort of negotiate on the tariffs, as a way to use them as some sort of leverage to get what he wants.
Yes, indeed. I mean, Trump has criticised China's failure to curb those fentanyl exports to the US. I mean, obviously the fentanyl crisis has led to so many US deaths. Does he have a point?
Yes, Caroline, he definitely has a point. I think it's worth looking back in history for this, and just to remind our audiences that in 2022, I believe, more than 100,000 Americans died as a result of drug overdoses, most of them due to fentanyl, which, you know, as I'm sure you talk about on the program a lot, is a highly addictive drug. And interestingly, I found this statistic, or rather this piece of research, really interesting. I've written about it before for Bloomberg Opinion, but a Pew Research Center study into voter concerns published in February ahead of the election found that over half of the people surveyed prioritized reducing the availability of illegal drugs over reducing the budget deficit and improving the job market. And that just goes to show how important an issue this is for American voters. And I think that is at the heart of why you're seeing Donald Trump saying, look, we need to stop these exports of fentanyl from China. He said it before. The issue with fentanyl exports is, even though the Chinese say that they have taken some action, and to be fair to them, they have, the problem is the routes through which these drugs find themselves back in the United States, and it is also through Mexico, through a sort of complex network of illegal cartels. Now, it will be really interesting to see what happens if and when the two sides sit down. You know, Donald Trump has talked about meeting Xi Jinping, going to China. He had a conversation with him on the phone last Friday. And I wouldn't be surprised if this is at the top of the agenda as a way to say, look, crack down on the fentanyl trade seriously and realistically, because it really matters to my constituents, and then we can discuss tariffs and trade.
Krishna, I was also reading your latest piece about Taiwan and how Taiwan's be thinking about Donald Trump as president. I mean, is there an opportunity here for the island?
Yes and no. You know, I've just been in Taipei for the last week, and it was really interesting to me talking to a variety of people from across the political as well as the business sector. And I think it's fair to say that most people are very concerned about a Trump presidency, partly because they simply don't know what to expect. Now, Taiwan, of course, has depended on the United States for its security. China claims it as its own and has threatened to take it by force, if not through peaceful means. You know, by 2049 is the sort of deadline that the Chinese have set for themselves. Most analysts believe it's somewhere in between 2027 and 2035. So it's not far away, right? At the same time, there are pressures, political pressures inside Taiwan that has seen the domestic defense budget paralyzed in parliament. Trump has talked about Taiwan having to increase defense spending up to 10% of GDP. All of that is in doubt right now, and so the Taiwanese are basically in a situation where they have no way to convince Trump to protect them. One of the things I've argued, though, in the latest column that you've talked about, is that if you increase investment into the United States from Taiwanese companies, as well as open up market access and make business for American companies easier to do in Taiwan, that is one way to convince the Trump administration that, look, you know, this is an island that is worth protecting, not least because of the massive semiconductor industry there.
Yeah, does that transactional approach then translate into more military security? It's a really interesting piece that you've written. Krishna, thank you so much for being with us this morning and talking about the big picture, the relationship between the US, the new President Donald Trump, and China. Bloomberg opinion columnist Karishma Goswami.
But the announcements coming from Washington are being closely watched in Davos as well, where business and political leaders are attending the World Economic Forum. Bloomberg TV anchor Jemana Versace is there and she joins us now. Jemana, good morning. What is the mood among CEOs there when it comes to the announcements we're getting out of Donald Trump on the White House? Is it fears over tariffs or excitement about deregulation?
Yeah, well, it depends which geographic location you're talking about. Definitely the American executives we've spoken to are feeling really excited about the year to come. Yesterday on our banking panel at the World Economic Forum, we spoke to Mary Erdos, who runs JP Morgan Wealth and Asset Management. And she basically said, this is go time. They're ready to go. They're really excited with JP Morgan coming on back of their most profitable year on record last year. And there's this real feel amongst the business community, at least in the U.S., that the administration will be pro-business, pro-growth, deregulation, or perhaps not even deregulation, but a more permissible approach to regulation. All of those things will be good for M&A activity, liquidity, and deal-making. So those are some of the tailwinds for the U.S. economy. I think from the European standpoint, obviously, the perspective is a little bit different because of some of the growth headwinds, but also the regulatory headwinds. And that was one of the conversations that has come up as well. And we could talk more about this, but ultimately, European banks are bemoaning the fact that they're on the back foot versus the U.S. and U.K. counterparts, simply because the European regulators have decided to implement parts of Basel III, while other jurisdictions have delayed or postponed the decision altogether.
So is there a real fear that Europe might fall behind as Trump pursues this America First agenda? Does anyone have any solutions?
I thought the opinion piece that Mark Champion wrote today on the terminal was really interesting because he said President Trump and Ursula von der Leyen, who spoke yesterday, presented two completely different pictures of how they see their own economies. President Trump, on one hand, was painting this dystopian picture of the U.S. economy in decline and that he's going to turn it around. Ursula von der Leyen, on the other hand, was speaking about the vision that Europe has for the future and the innovation drive. But of course, in reality, it's quite the opposite. And in fact, people are more excited about the productivity and growth outlook for the U.S. than they are for Europe. I think the discussions around Europe more long-term are these very existential questions about what Europe can do to boost growth and boost productivity. And that comes down to investment in right infrastructure, deregulation, of course, as we spoke about, but perhaps reducing some of the red tape and the bureaucracy that it takes to get things across the line and to help invest more in technologies of the future as opposed to industries of the past.
Joanne, I think it's fair to say Donald Trump's casting a fairly long shadow over this Davos meeting. But of course, there's lots more going on in the world. What are the other key geopolitical conversations that are being had there?
There's quite a lot on the Middle East front, of course. Just speaking from my own perspective, I think there really is this feeling that it's a new dawn almost for the region, given the ceasefire that's in place. And we will be speaking to the Iraqi president tomorrow, amongst others, the Saudi finance minister, to get their take on political developments in that part of the world. But then within Europe, Bloomberg are having a very high-profile conversation later today with President Zelensky of Ukraine. That is going to be very interesting and high on the agenda. Zelensky yesterday did give a speech, and it was interesting because he actually sort of took aim at Europe in his speech yesterday. He was saying that for too long, Europe has relied on Russian gas. It's time to completely reduce that dependency. He also called on European allies to continue to increase defense spending. So you've got to think that perhaps his audience is one person, and that one person is President Trump, who, by the way, will also be giving a video address to Davos tomorrow. So there's going to be quite a lot of political news over the next 24 hours.
Okay, Jemana Versace, Bloomberg Middle East Horizons, Middle East Africa host in Davos this morning, part of the Bloomberg team there covering that story. Thank you very much for joining us live from Davos.
Now at 6:20 a.m. here in the City of London, let's think about the markets. So we've been talking about the raft of announcements on President Donald Trump. Well, this joint AI venture seems to have boosted stock futures for the Nasdaq, which is currently up by 0.7%. It's $100 billion first up, but it's hoped that it will reach $500 billion or more. In terms of other announcements, Trump talking about weighing 10% tariffs on China or Chinese imports. The dollar is stronger this morning on the back of that, up a tenth of 1%, and as you'd expect, the MSCI China index is dropping 1.9% this morning. CSI 300 index also down by 1.1%. You had results out of Netflix yesterday, shares climbing 14% post-market. In terms of stock futures for Europe, they are up by 0.2%. Looking at the bond markets, 10-year US yields right now trading at the moment at 458. So yesterday they held on to their rally, closing 7 basis points lower. And the oil prices declined yesterday and continue to drop this morning. WTI crude futures down 4/10 at $75.50 the barrel. That is your Bloomberg Radio Business Flash. Stephen.
Caroline, thank you. Time now for a look at some of the other stories making news in the UK and around the world. Turkey has declared a day of national mourning after a fire in a popular ski resort killed 76 people. Authorities are investigating the cause of the blaze. At least 7 people have been killed in an Israeli military raid on the West Bank, according to the Health Ministry. Israel has confirmed that it has begun a major new campaign to target Iran-backed militias in the territory. There are growing fears that military attention is shifting from Gaza to the larger zone. And Greenland's Prime Minister wants talks with Donald Trump to explain the island doesn't want to be a part of the United States. The US President last week doubled down on his interest in controlling Greenland and threatening Denmark with tariffs. So this is one of our global news headlines.
Now to one of our top interviews. David Rubenstein, the Carlyle Group's co-founder and co-chairman, has been discussing the prominent role of tech CEOs at the start of Donald Trump's second presidential term, as well as tariffs and the possibility of a TikTok ban. He's been speaking to Bloomberg's Jonathan Ferro and Lisa Abramovich at the World Economic Forum in Davos. Now, they started by discussing and asking David Rubenstein whether he agrees with Joe Biden's outgoing comments that America is becoming an oligopoly.
I don't want to side with either side and say either person is right.
You know both of them.
Right. I would say that clearly there are a lot of technology people that are involved with Donald Trump, and they were very visible at the inauguration. You could see the most visible people at the inauguration right behind the president when he was being sworn in were the tech CEOs. The finance CEOs, they must have been in Wall Street doing deals, or maybe they're in Davos. They weren't there. There's no doubt that business people have become very important in the American economy in the last couple of years because of technology. There's no doubt about it. This is true for President Biden, President Trump. The technology companies in the United States are not only dominant in the United States, they're dominant in the world. So if you're anywhere in the world today, can you get through get through the day without using American technology? Almost everybody in the world is using either Amazon or an Apple or Facebook or Google, and European technologies are not quite like that, and even the Asian technology, with the exception of TikTok, isn't really prevalent. So the American technology leaders have become important business leaders, not only in the United States, but all over the world. And they're more than business leaders, they've become like folk heroes in some ways. People that started these companies, Bill Gates, Mark Zuckerberg, among others, and the late Steve Jobs, these are like people much larger than life figures. And I'm not surprised that President Trump would want to involve them. And I think President Biden should meet with him as well.
Mark Zuckerberg said recently in a podcast with Joe Rogan that he felt like the European regulators were going after the US tech firms, and the US administration was giving the Europeans cover to do that. Do you sense a shift where we are now celebrating our national champions under Donald Trump in a way that maybe we haven't done over the last 4 years?
I think all presidents want to celebrate American technologies. I'm not sure exactly what Mark Zuckerberg is referring to, so I can't comment on that. But there's no doubt that when you have American technology companies, they're very dominant. Google is another one that had a lot of problems in Europe. You expect Europeans to maybe regulate because they're not happy with the fact that American companies are dominating their technology. You know, Europe and France really invented the internet. They had a kind of internet before we had the internet, but they kind of lost it. And as a result today, think of a European technology that you need to get through the day. There's virtually none of them. So I'm not surprised that Europe is upset about it, but Europe is an important ally of the United States, so I don't say that Rolex. I'm sorry? If you want to have a great summer vacation, there is no place better in the world than, you know, Mediterranean or Europe. And the museums are great, the food's great, the people are friendly, everything's wonderful. But if you really want to build a great technology company, many of the great technology leaders are moving to the United States from India or from Europe.
So there's a larger question here about how much we've priced in the U.S. market, tech market, divorcing from China at a time when it seems like maybe that's not exactly Donald Trump's plan. And I wonder whether that might be the surprise. Actually, a shift toward a more amenable approach toward China than currently this market is expecting.
I can't speak for Donald Trump, obviously, and he, you know, changes his mind when he feels it's appropriate to do so. He's a very transaction-oriented person. I wouldn't say he's as ideological as transaction-oriented. That would be my perception. And therefore, if he can get a deal with the Chinese on something that would be helpful to the United States, I think he'll do that. I've read that he wants to move there and get there relatively quickly and have a meeting with Xi Jinping. I think that'd be a good idea. But I think it's too early to say whether China is going to go down and the United States is going to go up in terms of their fight between each other, whether it's going to be large tariffs. I think the Secretary of Treasury said, designate, that the tariff policy is a maximalist policy, which is to say it's to be used in negotiating positions. So I suspect that will be what Donald Trump does, and his people negotiate and have the threat of tariffs, but maybe not impose them.
Right now, the takeaway for us from Davos has been this incredible optimism, this whole deal-making surge that we were expecting. Do you think that's overplayed, or do you think that that's going to be validated in the numbers?
Well, the optimism certainly is here. Whether it'll be merited, I don't know yet, but I do think that many business people feel that there'll be more of an opportunity to get regulatory burdens removed. There'll be more opportunity to get things done that won't have antitrust concerns. The SEC won't be as big a challenge for many people. I think that is the feeling of some business people, not everybody. And that is the feeling that I think is fueling a lot of the optimism, sure.
Is that your feeling?
I'm sorry?
Is that your feeling?
I feel it's a different environment. It will be different. I think there were some pluses to some of the things that were done in the previous administration, and there were some things that probably I wouldn't have agreed with, and we'll see what the new administration is going to do. I think the important thing you should think about is this. We've only had a president, the second term, non-consecutively once before. That's Grover Cleveland. And when you have second terms for presidents, sometimes in the second terms they get tired. They make mistakes. Reagan's second term wasn't perfect. Obviously Nixon had to leave. Bill Clinton had some challenges as well. Maybe that's because in a second term a president gets tired and his people get tired. Maybe if you have a president who has served as president before, actually knows something about the job, has some chance to think about it, comes back with fresh people, maybe a second term that's not consecutive might produce some good results. Well, time will tell.
So that was David Rubenstein, the host of the David Rubenstein Show peer-to-peer conversations. He was speaking there at Davos, talking about why US tech CEOs have become so important to the Trump administration and also globally, of course. But very interesting points that David was making. Coming up in the next part of the programme, we'll be thinking actually about tech, especially the new plan for AI infrastructure in the US. That's next.
This is Bloomberg Daybreak Europe. It isn't just Trump that I've known for a long time and get on very well with, which I do. Half his cabinet I know. Some of them are good friends. I have no doubt that under the Trump administration there will be plenty of opportunities that we can see that we should be positive.
The Paris Agreement continues to be the best hope for all humanity.
When you speak to European CEOs, there's also this excitement about the opportunity that the new administration might bring to the US economy in terms of growth.
Bloomberg Daybreak Europe on Bloomberg Radio.
It's coming up to 6:30 a.m. here in London. Good morning, I'm Caroline Hopker.
Hello, I'm Stephen Carroll. This is Bloomberg Daybreak Europe.
Looking at the markets, Chinese and Hong Kong shares are tumbling, with President Trump reiterating the possibility of 10% tariffs on China. Having said that, you've got some standout gains, with the Kospi up by 1.2%. The topics that Nikkei also gaining, with the idea of a big AI infrastructure build-out in the US, and NASDAQ futures also powering higher, 0.7%. So it really does seem to be reaction to the Trump administration mentioned, is powering markets. The dollar is trying to get 0.1%. European stock futures also up at 0.2%. 10 US yields are 4.58. Goes to the markets.
Our top stories. Donald Trump says he is still considering imposing across-the-board tariffs on Chinese imports. Speaking at an event at the White House, the newly installed U.S. president said the measures could be just weeks away.
We're talking about a tariff of 10% on China based on the fact that they're sending fentanyl to Mexico and Canada.
Beijing imposed restrictions last year on production of chemicals used to make fentanyl after pressure from the Biden administration. Trump also criticized the European Union on Tuesday, saying they treat it very, very badly, so they're going to be in for tariffs.
Donald Trump has also announced a U.S. joint venture with SoftBank, OpenAI and Oracle to fund the expansion of AI infrastructure. Dubbed Stargate, the project will deploy $100 billion immediately, with plans to increase that to at least $500 billion. Bloomberg Intelligence senior tech analyst Mandeep Singh explains how the money will be deployed.
All these hyperscalers, we know, they have spent about $240 billion in 2024. And now think of it as additional, $100 billion that will be invested in building compute capacity. And all of it is going to OpenAI. So I think that puts them at a big advantage in terms of, the foundational model players when you compare them to Google or Anthropic or Meta.
Mandeep Singh hinted that OpenAI will oversee operations. Initial equity will come from SoftBank, OpenAI, Oracle, and Abu Dhabi state investor NGX, with a build-out of the first computing system starting in Texas. Now, the announcement comes after Trump rescinded President Biden's sweeping executive order on AI, therefore halting the implementation of key safety and transparency requirements for AI developers.
Netflix ended 2024 with its biggest quarterly subscriber gain ever. New live sporting events and the return of hit Korean show Squid Game helped the company report numbers which were nearly double analyst estimates. More from Bloomberg's Charlie Pallett.
The company added 18.9 million customers in the fourth quarter. That was more than double what Wall Street expected and its largest quarterly gain in history. David Joyce is a senior analyst at Seaport Research Partners.
The subscriber numbers, the last quarter we're going to get them, but they really are really what blew away the expectations. The revenue came in line with our estimate, as did operating income and EPS.
The latest quarter brought global subscribers at Netflix to more than 300 million. In New York, Charlie Pallett, Bloomberg Radio.
Meta is working on upgrades to its smart glasses, including Oakley-branded glasses for athletes. The firm is also exploring new wearable devices, such as watches and camera-equipped earbuds, aimed at using its AI features and involving those in more of their products. The flurry of products is part of a bid to reposition Meta as an AI innovator with a focus on hardware that can usher in the next era of computing.
Here in the UK, Keir Starmer is facing division in the Labour Party over plans to build a third runway at Heathrow Airport. The government is preparing to back the expansion plans, but some MPs are opposed due to concerns about air and noise pollution, as well as climate commitments. The Chancellor, Rachel Reeves, is expected to announce some news about Heathrow and further schemes for Luton and Gatwick airports before the end of the month. Business groups have expressed support for the measures.
So those are our top stories for you this morning. Still ahead on Bloomberg Daybreak, we will bring you more of our coverage from the World Economic Forum in Davos, including a conversation with Ruth Porat, who is President and Chief Investment Officer of Alphabet. So that's, we've also been live, of course, this morning at Davos with Jumana Basecci. It is absolutely freezing temperatures over there, but the big conversations are hugely important, and I think the visions of the US and Europe, illustrated by Trump and by Ursula von der Leyen, are the things that really do have the kind of attention of all of those leaders who are speaking to Davos, speaking to Bloomberg at Davos.
Yeah, and plenty more to come throughout the programme this morning. We're bringing you our conversation with the Chancellor Rachel Reeves and Business Secretary Jonathan Reynolds in the next hour. Stay with us for more from Davos coming up next. This is Bloomberg.
This is New York's only 24-hour source for world markets and breaking business news. Bloomberg 1130. Coming up, the latest market-moving headlines from Bloomberg. First, an update from our partners at CBS News. CBS News Brief. The Northeast won't be getting a break from the frigid temperatures just yet. CBS News meteorologist David Parkinson.
The actual high temperature not getting to 20 degrees in New York and Philadelphia. It's going to feel in some places like the single digits all day long.
President Trump is defending his pardons of people involved in the violent attack on the Capitol 4 years ago by criticizing his predecessor.
So these people have already served a long period of time, and I made a decision to give a pardon. Joe Biden gave a pardon yesterday to a lot of criminals. These are criminals that he gave a pardon to.
The Supreme Court will hear arguments in the morning over what constitutes excessive force by police and what should be considered when assessing police actions.
What is the legal standard for determining whether a police officer feels a threat to his or her safety and thereby is correct in resorting to excessive force?
CBS News legal analyst Thane Rosenbaum. CBS News Brief. I'm Michael Toscano.
Everything you love about Bloomberg Radio is now inside your car. The new Bloomberg Business app, featuring Apple CarPlay and Android Auto. All your favorite Bloomberg Radio shows right on your dashboard. Download it free in the Apple App Store or on Google Play.
You can't escape a traffic jam. Know what else you can't escape? Seasonal allergies. You! And you might think you can avoid that coffee stain until... No, really. You can't escape a lot of things in life, but you can escape prediabetes. Prediabetes captures 1 in 3 adults. There are usually no signs of prediabetes. In fact, most people don't even know they have it. But with early diagnosis, you can change the outcome and prevent or delay type 2 diabetes. Take action by taking a 1-minute risk test at doihaveprediabetes.org. You might not be able to escape having this song stuck in your head, but you can escape prediabetes. Go to doihaveprediabetes.org today. Brought to you by the Ad Council and the Centers for Disease Control and Prevention.
Why just listen to Bloomberg Surveillance when you can also watch us live on YouTube? I'm Lisa Mateo.
And I'm Tom Keene. And join us weekday mornings along with Paul Sweet and Michael Barr starting at 7 a.m.
Head to the Bloomberg Podcast page on YouTube to hear and see the smartest voices on global markets and investment.
Make Bloomberg Surveillance an essential part of your morning routine weekdays from 7 to 10.
Visit the Bloomberg Podcast page on YouTube and click on the live feed to join us today.
Bloomberg Radio, on demand, and in your podcast feed.
On the latest edition of the Bloomberg Surveillance Podcast, Lori Calvasina, RBC Capital Markets.
What we did when we put our year-ahead outlook together, and we did this around Thanksgiving, so we already knew the outcome. And we had been sort of updating our models heading into that well ahead of the November election. But what we did do with one of our sort of 5 sets of back tests, we were able to more discreetly model in the political environment. So our political back test actually, I think it's like around an 11 to 12% type annual return we added into the targeting mix. But that's the return you typically see when Republicans run the White House, the Senate, and the House. And so we thought that sort of did a good job of capturing the idea of a better animal spirit environment, better vibes, and a more kind of business-friendly climate.
So how do we think about it for 2025? One of the areas that I feel like there might be a risk to the market is maybe even more dependent than usual on our earnings. Earnings really need to come through because I don't think the Fed's going to do a whole lot for us in 2025. What's your concern or confidence in the earnings outlook?
Well, so look, I've been lucky. The rate strategist that I work with has been calling for an early end to the cutting cycle for about 6 months now. And so he did finally just pull out the January cut, but the January cut was the only one he had in this year for quite some time. So what that translated to for us is in our valuation model, so this is another one of the 5 things that goes into our target mix as we come up with a target PE and look at that in the context of our earnings forecast and then get a fair value for the S&P. So bottom line, because of his Fed view, he also was pretty aggressive on the 10-year yield. We haven't really had any multiple expansion baked into our outlook, and I think that's the right answer.
Hear the full conversation on the latest edition of the Bloomberg Surveillance Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is the Bloomberg Business Flash.
6:40 a.m. here in the city of London. I'm Caroline Hepker. It looks to be a lot of reaction to the fresh policies that are coming out of President Trump. So China and Hong Kong stocks are down this morning. Trump talking again about 10% tariffs on China perhaps at the start of February. The offshore yuan's also weakened this morning. Shares in Japan and South Korea, though, have gained on the plans for a big push into AI investment and building out things like data centers in the US. And NASDAQ futures also powering higher this morning, up by some 0.6, almost 0.7%. European stock futures are also up 0.2%. You saw Netflix shares climbing 14% after the market. They saw a record 18.9 million subscribers in the fourth quarter. That was more than double the Wall Street expectation for Netflix, hence the big stock jump. Stocks also declined into the close in the US yesterday for the S&P 500. As for treasuries, they held on to the rally yesterday. This morning we trade at 4.58 for 10-year yields. Oil prices continue to decline. We saw a drop of 2.5% of WTI yesterday. We're down another 0.5% this morning. Brent crude futures trading at $79.06 a barrel. That is your Bloomberg Radio Business Flash.
Caroline, thank you. I'm Stephen Carroll. Time now for a look at some of the other stories making news in the UK and around the world. Turkey has declared a national day of mourning after a fire in a popular ski resort killed 76 people. Authorities are investigating the cause of the blaze in the northern resort of Katakaya. At least 7 people have been killed in an Israeli military raid on the West Bank, according to the Palestinian Health Ministry. Israel has confirmed it's begun a major new campaign targeting Iran-backed militias in the territory. And Greenland's Prime Minister wants talks with Donald Trump to explain the island doesn't want to be part of the United States. The US President last week doubled down on his interest in controlling Greenland and is threatening Denmark with tariffs. Those are some of our global news headlines.
Stephen, thank you so much. Now, as we've been reporting this hour, President Donald Trump has announced a joint venture to fund billions of dollars worth of AI infrastructure. The announcement came as Alphabet President and CIO Ruth Porat warned that the US is not guaranteed to maintain a lead over China in the race to develop artificial intelligence. In an interview with Bloomberg's Eric Schatzker on the sidelines of the World Economic Forum in Davos, Porat called for bold and responsible AI regulations that are aligned across geographies in order to avoid impeding investment.
The president and his team have been clear that they see technology as an asset for the country. They see the economic upside that comes with executing the right way. They want to clear away some of the impediments to investing, things like permitting, delays, etc., which is going to be an important part of providing the infrastructure backbone to power growth. And so I think that there's a tremendous amount of opportunity to continue working with them as we did in Trump 1.0.
These things are easy to say, hard to do. Do you feel optimistic about their chances for success?
When you say there, just expand a bit, I think the opportunity with AI is profound.
Oh, no. I meant the things that President Trump and his team have been saying over the past several weeks about what they want to do in order to supercharge the U.S. economy and open up opportunities for American technology. I say those things are easy to say. Developing smart policy and furthermore executing smart policy, oftentimes, right, not so easy. And I'm curious to know, about your level of optimism, hopefulness, if you will, for what can be accomplished. You refer to it as Trump 1.0, what can be accomplished under Trump 2.0.
So I think generally I'm a tech optimist, I'm an optimist. You know this, probably the most profound time in my career was in the Bush administration when Secretary Hank Paulson brought me to work with Treasury and then the Treasury and Fed during the financial crisis. And I think for all of us in the private sector, it's absolutely imperative to engage because, to your point, the devil's in the details in landing things the right way so that you don't have unintended consequences. There's quite a bit that needs to be done. I think, importantly, when we look at the implications and the upside from investing in AI, this is something that the U.S. and the West needs to continue to execute against and execute well because the implications are so great. It's not just economic upside, it's advancing science, it's what we can do with education and health, and it becomes a national security opportunity and imperative.
And I think when you have economic strength, you have national security strength, and you work with your allies well, it continues to broaden out the kind of the currency within which we're operating. And they've articulated that. So, again, nothing is easy. You're right. But I think it requires each of us to constructively engage, as I expect they will, as we most certainly want to make sure things get landed in the most productive way.
Helps to explain, I suppose, why Sergey Brin, co-founder of Google, of course, and Sundar, your CEO, spent some time with President Trump in the weeks following the inauguration, as did many other leading figures in the tech industry. Ruth, you made mention of your advisory work for the U.S. government back around the financial crisis. I'm glad you did, actually, because it helps to establish some important context. Those of you here recognize Ruth in her current role and maybe her immediate precedent role. She's now the president and chief investment officer at Google and Alphabet. Before that, she was the chief financial officer since 2015. But before that, she had a whole other career on Wall Street at Morgan Stanley, where in the 1990s she headed tech banking. She ended up running financial institutions banking. And then, as you mentioned, you helped to advise the U.S. government on AIG, Fannie and Freddie, and you were the CFO at Morgan Stanley as well. And I mention this because I'm going to come back to it a little later in our conversation. In the meantime, help me out on a personal level. What do you hope for most out of this kind of political, at the very least, political reset that America has experienced with this election?
You know, I look at it really at this point through the lens that we're all privileged to live in a time where AI can be applied not just to economic upside, but when you look, for example, at what we're able to do to address some of the really big social imperatives around healthcare delivery, around education. You know, notably my colleague Dennis Estrada, when he won the Nobel Prize, was awarded the Nobel Prize last fall for AlphaFold, described as the single greatest contribution to drug discovery with our colleague John Jump as well. But he was asked in his Nobel speech, and he said what really motivated him and what motivates him is solving the most intractable problems. And when you think about the application of AI to help, as an example, early detection saves lives. At Google, we have pioneered early detection of metastatic cancer, lung cancer, breast cancer. We're doing it with diabetic retinopathy. These are really exciting. So when you say, how is this administration going to open new opportunities? What are we going to land? There's a whole swath. If you want, again, go back to the opening comment. They have said tech is an asset. We want economic growth. We want to cut through inefficiency. These are opportunities. And on the inefficiency point is when I get pretty excited about, as you probably would imagine.
So that was Ruth Porat there, who was speaking to Bloomberg's Eric Schatzker, the Alphabet president, CIO. Ruth Porat, really quite interesting on AI and the opportunities that it presents, and that does seem to be, one of the initial announcements, big announcements from President Trump.
Yeah, indeed. I mean, we're continuing to watch the question of, what tech companies are also worried about, which is how the regulation battle is going to play out between Europe and the United States under Donald Trump as well. And looking at the meeting that's upcoming between Olaf Scholz and Emmanuel Macron as well, that's one of the issues they're expected to discuss, particularly in the context of how to combat misinformation and disinformation online as well, and how that could affect elections in Europe this year as well, and that meeting taking place in Paris.
I think there's also a question mark about timeline, that is also worth of AI and how quickly the build-out happens, so that's powering stock futures, for example, on the NASDAQ up this morning, but also how quickly the tariffs should take place. Although the deadlines are being talked about as 1st of February, that is a bit of a repeat of Trump in his first term, with very tight, 2-3 week deadlines. In reality, that's not actually what played out over time. These issues do take more than that amount of time usually.
Up next, we'll be digging into the market reaction to the latest pronouncements by Donald Trump. Our market reporter Valerie Taital will join us from Bloomberg.
Get the news you need to start your day in just 15 minutes. President Trump has launched his second term.
The new president signed dozens of executive orders.
Wake up with Bloomberg Daybreak U.S. edition.
The U.S. Supreme Court will hear arguments.
Challenge this, Big One of the Big Ten, available now in your podcast feed. Weekday morning at 6 a.m. Eastern. The latest on the wildfires in Los Angeles. Subscribe to Bloomberg Daybreak U.S. edition today on Apple, Spotify, and everywhere you get your podcasts. Bloomberg Radio. Content changes everything.
How does BNY Wealth help accomplished individuals, families, and business owners achieve their financial goals? Listen as Sinead Colton-Grant, Chief Investment Officer of BNY Wealth, explains.
At BNY Wealth, we start with the question, what do you want your wealth to do for you? For over 240 years, we have partnered alongside our clients, putting our expertise and platforms to work for them. Utilizing the same methodologies employed in institutional asset management, our multidisciplinary active wealth approach helps ensure that every financial decision our clients make actively and intentionally powers their goals and uncovers opportunities they may otherwise have missed. The result? Highly satisfied clients and enduring relationships that span generations.
To learn more about how BNY Wealth can help power your wealth goals, visit bny.com/wealth. BNY Wealth conducts business through various operating subsidiaries of the Bank of New York Mellon Corporation.
Influential conversations from Bloomberg Television. Here's Francine Lacroix.
Millionaire is in charge of one of the most exclusive luxury brands in the world. Chanel, the French fashion house known for its iconic designs and fragrances, made the avant-garde move to appoint her in the top job. Previously a human resources veteran, she spent 3 decades at Unilever before switching from the world of fast-moving consumer goods to haute couture and beauty. The firm's history is legendary, from its founder, Gabrielle Coco, to its fans, including Marilyn Monroe. For the Millionaire, it's a chance to make history.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put them in the night shift. I said, how will I be a successful production manager or personal manager of a factory? So I never went into a night shift and knew how a third of my people worked. So in some ways it just fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of, I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell them who ask me for advice, saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. Lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility and respect.
Hear more conversations like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app. Or check your local cable listings. Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
6:53 a.m. here in the City of London. Good morning, I'm Caroline Hepker. The all-country world index is flat, and mostly what is powering the markets, though, especially in Asia, are the announcements out of the new Trump White House. So weighing 10% tariffs on China, that sees the MSCI China index down by 1.9%. The CSI 300 has also tumbled almost 1% this morning, and the offshore yuan is weaker. But the announcements on AI and building out US infrastructure has helped to lift NASDAQ futures up by 0.6%. European stock futures also gaining 0.2%. Growing concerns around stagflation in the UK. The pound is down another 0.25% this morning. Netflix shares climbed 14% after market yesterday. Treasuries closed 7 basis points lower yesterday. And looking at those 10-year yields this morning, 4.58, so flat this morning. That is your Bloomberg Radio Business Flash.
Okay, Caroline, thanks very much. Let's get more details now on some of those market movements with our market supporter, Valerie Teitel. Valerie, we talked there about the move on Chinese equities, the opposite to what we were seeing this time yesterday, where there was almost a sort of relief that China hadn't been targeted in Donald Trump's opening volley, but he got around to it eventually.
Yeah, a bit of a, I guess, a turnaround in the positive sentiment on Chinese equities now that he has clearly stated that he intends to look at a 10% tariff on Chinese assets. It is notable, though, that that 10% number is way less than other numbers that were floated earlier in the year in his run-up to his election. He did talk about a multiple of 20%. So perhaps today we're seeing a retracement in Chinese equities, but still this is not the, I guess, bear case
for the tit-for-tat trade war that we were expected, to come to fruition with China. Maybe a lot of that goes back to this Friday phone call he had with Xi. These seems to be, working together to find a solution to TikTok. Maybe they'll work together to find a solution for fixing the swelling trade deficit that the U.S. has with China. But other Asian stocks are getting quite a boost from the optimism over more AI spending under Donald Trump, the AI path that he unveiled to fund more AI infrastructure. We're seeing the Nikkei, the index in Japan, trade solidly. SoftBank, TSMC, the chip maker in Taiwan, data centers, and even Japanese cable makers have some double-digit gains on the back that Trump would use emergency declarations, executive actions to help ease construction projects for building more AI infrastructure.
Evident, AI safety replaced by AI build-out. In terms of the other reactions, though, the dollar and treasury markets, not quite such pronounced responses. Why not?
A muted reaction when it comes to FX and treasuries. A lot of this may be pointing to the fact that he's reiterated this February 1st date a few times now when it came to the tariffs on Canada and Mexico. He said by February 1st. Again, he mentioned that when he was talking about these tariffs with China. And I know it's only 2 weeks away, but I guess in markets' head, there's still a lot of uncertainty that could come in between then and when they finally get this tariff plan together. So maybe the market is just discounting what we're hearing from Trump. They want to see something on paper. They want to see his team, behind him with something concrete before we get this market reaction. Or it could just tell us, Caroline, that this was already fairly in the price and we are needing to see something bigger on the tariff announcement in order to, let's say, take another leg higher in the dollar or see treasury yields respond.
And Valerie, just in the past few minutes, we've been hearing from Davos, from the ECB policymaker, Klaas Knot, who's been talking a little bit about the path for interest rates ahead, and some interesting commentary on that.
Yeah, he said he was comfortable with rate expectations for January and March, which means he agrees with market pricing that they will cut in January and then follow it up with another cut in March. Now, the market is pricing currently 4 back-to-back cuts to take the ECB rate towards neutral by the first half of the year. He was asked about whether he sees the need to enter into expansionary territory. He said he's not convinced they need to go into stimulative mode, and that's something we've heard from other members on the sidelines of Davos. They're really refraining from discussing cutting rates below the neutral territory. That would be a surprise to the market if we did hear any ECB speaker, raising their hands saying they want to take rates below neutral, but we haven't necessarily gotten a clear message from that yet. The other interesting thing that the ECB members have been talking about is just another warning on competitiveness. We heard from Francois Villeroy saying that Trump should be a wake-up call for Europe. Also heard from the Peter Kazmir, the Slovakian central bank governing council member, talking about Trump's economic policies only makes European competitive problems even bigger. So there is a sense of urgency maybe from ECB policy members that the structural issues in Europe need to be addressed, because what is going on in the U.S. when it comes to the regulatory framework is only highlighting the issues that Europe faces.
Yeah, absolutely. And I think it's also fascinating, though, to see the reaction in some ways to this new landscape, maybe not directly to Trump, but, for example, in the UK, the government replacing the chair for CMA. I mean, I don't know that that's ever happened before. And, of course, we're going to be hearing from the Chancellor Rachel Reeves coming up in the next few moments. Valerie Total, thank you so much for joining us this morning.
In the next hour of Bloomberg Daybreak, here are plenty more to come from Davos, including that conversation, Rachel Reeves and Jonathan Reynolds, speaking to our editor-in-chief. Stay with us for that. There's more on the markets. This is Bloomberg.
Every Bloomberg radio show.
This is Bloomberg Surveillance.
You're listening to Bloomberg Business Week, every Bloomberg podcast.
Welcome to the Outlaws podcast.
This is the Big Take, every Bloomberg News headline.
A Bloomberg News exclusive.
Historic moves in the Treasury market. Catch every moment of Bloomberg Radio inside your car.
This is a joy.
The Bloomberg Business app, now on Apple CarPlay and Android Auto. Download it free in the Apple App Store or on Google Play. Bloomberg Radio. Context changes everything.
Live from the financial capital of the world, broadcasting across the globe. This is WBBR New York, Bloomberg 1130.
is Bloomberg Daybreak Europe for this Wednesday, the 22nd of January in London, coming up today.
China in the firing line. Trump threatens the world's second largest economy with 10% tariffs.
Going interstellar, the new US president launches Project Stargate, a potential $500 billion plan to fund US AI infrastructure.
Netflix and Thrill, live sports and Squid Game drive the streaming giant to a record quarter.
Plus, we'll be hearing from the Chancellor Rachel Reeves and Business Secretary Jonathan Reynolds this hour when they talk to our Editor-in-Chief, John Micklethwaite, at Bloomberg's event in Davos.
That's all straight ahead on Bloomberg Daybreak Europe, on PAB Digital Radio London, Bloomberg 1130 New York, Bloomberg 99.1 Washington DC, Bloomberg 92.9 Boston, Sirius XM Channel 121, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Good morning from London, I'm Stephen Carroll.
And I'm Caroline Hector. Welcome to Bloomberg Daybreak Europe.
On the markets, we are looking for a reaction to Donald Trump's announcement that he is going to think about tariffs on China after all. Bloomberg Dollar Spot Index a 1/10% stronger, the offshore yuan 3/10 weaker, the CSI 300 index of Chinese shares is 9/10 lower. European stock futures slightly positive this morning, up a 1/10% for Euro Stoxx 50 futures. We are watching oil prices fall further today. WTI down by 0.5% to $75.49. Brent crude just over $79 a barrel. The euro trading at 104 against the dollar.
Now to our top stories. Donald Trump says that he is still considering imposing across-the-board tariffs on Chinese imports. Speaking at the White House, the newly installed U.S. president said the measures could be just weeks away.
We're talking about a tariff of 10% on China based on the fact that they're sending fentanyl to Mexico and Canada.
Beijing imposed restrictions last year on the production of chemicals used to make fentanyl under pressure from the Biden administration. President Trump also criticized the European Union on Tuesday, saying they treated so they're going to be hit with tariffs.
Donald Trump has also announced a U.S. joint venture with SoftBank, OpenAI and Oracle to fund the expansion of AI infrastructure. Dubbed Stargate, the project will deploy $100 billion immediately, with plans to increase that to at least $500 billion. Bloomberg Intelligence's senior tech analyst Mandeep Singh explains how the money will be deployed.
I'm thrilled we get to do this in the United States of America. I think this will be the most important project of this era. And as Masa said, for AGI to get built here, to create hundreds of thousands of jobs, to create a new industry centered here, we wouldn't be able to do this without you, Mr. President. And I'm thrilled that we get to. I think it'll be an exciting project. I think we'll be able to do all of the wonderful things these guys talked about. But the fact that we get to do this in the United States is, I think, wonderful.
That was the OpenAI CEO Sam Altman there speaking in reaction to that plan. Initial equity will come from SoftBank, OpenAI, Oracle and Abu Dhabi state investor MGX with the build-out of the first computing system starting in Texas. The announcement comes after Trump rescinded Biden's sweeping executive order on AI, halting the implementation of key safety and transparency requirements for AI developers.
Donald Trump has also suggested that he would be open to Elon Musk or Oracle chairman Larry Ellison purchasing TikTok in a joint venture with the US. The president suggested the buyer would give half of the company to the US government in exchange for being allowed to operate.
The deal, I think, is this, and I've met with owners of TikTok, the big owners. It's worthless if it doesn't get a permit. It's not like, oh, you can take the U.S. The whole thing is worthless. With a permit, it's worth like $1 trillion. So what I'm thinking about saying to somebody is buy it and give half to the United States of America, half, and we'll give you the permit. And they'll have a great partner, the United States.
After taking office on Monday, President Trump temporarily halted a ban on TikTok in the US, giving the company and its Chinese parent ByteDance a 75-day reprieve. However, it's far from certain that a sale will actually materialize, and ByteDance has previously said that it has no intention of divesting.
Amid the slew of announcements, the US president also discussed the ongoing conflict between Russia and Ukraine. Trump said he would probably impose sanctions on Russia if Vladimir Putin doesn't come to the table to negotiate. The news comes as Ukraine's Vladimir Zelensky praised President Trump's ambition to expand U.S. energy exports.
Right now,
thinks on our side, President Trump is going to export more energy, but Europe needs to step up and do more long-term work to secure real energy independence. You can't keep buying gas from Moscow while also expecting security guarantees, help, and backup from the Americans. That's just wrong.
Ukrainian President Vladimir Zelensky speaking at the annual meeting of the World Economic Forum in Davos. He went on to refer to the US as an indispensable ally and called on Europe to become more self-reliant and develop its industry.
To some corporate news now. Netflix has reported the biggest quarterly increase in subscribers in its history. The streaming giant added nearly 19 million customers in the last 3 months of last year. New live sporting events and the return of the hit Korean show Squid Game helped the company beat expectations. Bloomberg's Caroline Hyde says it's a blockbuster number.
They've added on net 41 million more people around the world over the course of this year. I mean, this is better than they did during 2020, in the onset of COVID, when we were all suddenly trapped in our homes and had nothing else to do.
Hyde adds that this is the last time that we'll get subscriber numbers from Netflix, as the company intends to stop releasing them. Netflix shares rose by 14% in after-hours trading.
In the UK, the government has ousted the chair of its Competitions and Markets Authority, Marcus Bockerink, in a bid to show the business world that it's serious about economic growth. Bloomberg was told ministers have been underwhelmed by the CMA's proposals to deregulate. Bloomberg's James Woolcock has the story.
There's a new villain in Westminster. Government ministers have been calling on regulators to give businesses more leeway for months. Now, frustrated with the response, they've decided heads must roll. It's a clear signal from the UK government. It wants to be seen as pro-business and wants to boost the economy, but will a new face of the regulator drive new policy? In London, James Woolcock, Bloomberg Radio.
We'll be hearing from the Chancellor, Rachel Reeves, and Business Secretary Jonathan Reynolds later this hour when they speak to our Editor-in-Chief, Tom Micklethwaite, at Bloomberg House in Davos.
Now, those are our top stories for you this morning. Let's get to the markets this hour. Reaction to many of President Trump's new announcements on AI. That's helping to lift stock futures on the Nasdaq, which are up by almost 0.7%. But then the idea of more tariffs being implemented potentially in less than a fortnight has hit stocks on mainland China. CSI 300, for example, down by 1%, Hang Seng down 1.7%. European stock futures are in the green. In terms of 10-year Treasury yields, they trade at 4.58. Oil prices continuing to drop. And we've also had some breaking news figures out of the UK this morning. The budget deficit even wider than had been estimated in December, £17.8 billion in terms of the budget deficit versus the estimate of 14.2. And they also see the April to December budget deficit overall as being larger than the OBR, the independent forecast for the government, says. More difficult figures for the Chancellor, Rachel Reeves, and Governor here in Britain.
Well, indeed, looking at the focus that we've had on the state of the public finances, the reaction from the Chief Secretary of Treasury, Darren Jones, talking about the fiscal rules being non-negotiable, and this is why they will have an iron grip on public finances. He has promised to, quote, root out waste in a spending review that's due in June of this year as well. Government investment had also been part of the reason that budget deficit was higher, as they've been added another £2.5 billion than in December to money including investing in military dwellings.
Look, I wonder, is this a moment where we're starting to see change and reaction? You know, the arrival of Donald Trump in his second term, does that mean ramifications for Britain? We're seeing so many other countries move position. We are going to be hearing from the Chancellor. It's going to be an absolutely fascinating interview. Just this morning in the top stories, we were talking about replacing the CMA, the Competition and Markets Authority. I don't remember that ever having been done before in Britain. We know that the government wants a more growth-focused capitalist mindset from British regulators. Now we've got former Amazon executive Doug Kerr, who's been brought in on an interim basis. I think there have been lots of questions for the Chancellor, with Bloomberg's editor-in-chief John Micklethwaite being in the hot seat, getting to ask all of those questions today.
Well, before we get to that, let's think about the other story that's casting a shadow over the World Economic Forum in Davos, and that's, of course, the slew of announcements coming from Donald Trump. We've had these commentary now about the potential for tariffs on China, to be expected, but hadn't been the focus of the initial comments from the US president. Let's go live to Davos and speak to Bloomberg TV anchor Jemana Bersachi, who's there for us this morning. Jemana, talk to us about how the business leaders who are there are thinking about the changes being announced from Washington. Is this excitement about the prospect of deregulation? Is it concern about tariffs? What is the mood?
Yeah, I think it really depends which geographic location you're referring to. Most of the American executives that we've spoken to, in fact, all of them, are feeling pretty good about this year. Yesterday, on a World Economic Forum panel, we had a conversation with several bank CEOs and industry leaders from the banking sector. Mary Erdos, who runs JP Morgan Wealth Management and Asset Management, basically said this is go time for the banking industry. They're really excited about the prospects of deal making picking up this year, the potential for further M&A activity, trading activity to pick up, more liquidity in the space. And they do feel reassured that this incoming administration is actually going to enact business-friendly policies. That being said, I think there is perhaps a little bit of consternation about the volatility of President Trump and the fact that it is very difficult to predict what his next steps are going to be. And the other conversation is whether all of the good news is already factored in. So at this point, what is going to be the next catalyst for markets to keep moving higher, or for investors to keep cheering what has yet to be announced by the Trump administration? So there is something to be said there for the markets perhaps getting a bit ahead of themselves. Of course, over in Europe, the conversation is a little different, because I would say the main theme here is about how you get these European economies, and you were just speaking now about the UK, but how you bring up their productivity levels and competitiveness versus the rest of the world, and specifically the US.
Yeah, and you can look at a lot of figures to see the divergence between Europe, the UK and the US since the global financial crisis in 2007-8. You know, if you think about incomes and wealth and IPOs, you know, companies coming to the stock market and so on. So there's surely a real fear now in Europe, you know, that they may fall behind versus Trump pursuing this America First agenda. The question is, what are the solutions to that?
Yeah, and I think these are some of the discussions that are taking place here, which is why, arguably, I mean, this is what World Economic Forum would say. This is why the forum exists, so that people can come together to talk about some of the pressing issues of our time. But definitely there is a recognition that Europe needs to invest more in some of the future-looking industries, to be more competitive on technology, but also to perhaps reduce the regulatory burden of some of the bureaucracy that exists, that sort of delays the time frame of getting deals over the line. I would say, again, going back to this banking panel, we were talking about the UK, and both the Barclays CEO, and Bill Winters from Standard Chartered said, look, we both believe that the UK has potential, but new government has laid out plans. We also need to give this government some time to realize those plans. So, you know, even hearing from some of those industry executives, they want to be optimistic, and they do feel that the government is listening to them, and perhaps we should be a bit more patient in terms of how quickly it's going to take this Starmer government to turn things around.
One of the issues that's been raised in particular driving report and the latter report as well is to do with cross-border takeovers in the EU. And one of the conversations that you've been having in Davos, Jemana, was with the CEO of Commerzbank, a company very much at the centre of one of these debates, given the increase in stake that Unicredit has taken. I mean, what did Bettina Orloff have to tell you in terms of the hopes for those sorts of deals being able to go through, or even where she sees the future of her own bank?
Yeah, so it's really interesting. As you know, in my old life, when I was covering the European markets a lot more closely, for ages, we've been talking about the possibility of this banking union, capital markets union in Europe, and there hasn't been a lot of progress on that front. That's the reason why it's so difficult to see cross-border mergers take place.
The big one right now, the big story is UniCredit Commerzbank. UniCredit have been building up their stake at Commerzbank. It's sitting at around 28%. And Andrea Orchel, who's the CEO of UniCredit, has expressed his desire to move towards a full takeover at the right price. That at the right price is important. Now, I had the opportunity to speak to Commerzbank yesterday, and they've been resisting the takeover attempts by UniCredit. But she did open the door to perhaps a discussion by suggesting if UniCredit revise their offer, bring a proper offer to them, to the table, then they'd consider it. And of course, essentially that means a higher price. So we'll see whether the economics can work on that deal. But I did ask her at the end of the interview, just from an existential standpoint, if the deal does go ahead, it's a good thing for the banking sector because we've been talking about consolidation and the need for consolidation for years now. And she said to me, no, because this isn't another country's bank taking over a German bank. She views UniCredit as a German competitor because UniCredit actually do have a significant exposure to Germany to begin with. So that was her impression of it. I think, you know, from talking to other executives here, it is unlikely, though, that this potential takeover can unleash a huge wave of cross-border consolidation in Europe. We're still far from that happening.
Giovanna, just on some of the broader issues that we have been thinking about at Davos as well, of course it's not just Donald Trump or banking mergers. In terms of the big geopolitical issues, obviously you monitor events very closely in the Middle East in your day job. What is the conversation happening there on those other issues?
Yeah, so geopolitics obviously going to feature high on the agenda. I do just want to point out that today we at Bloomberg, our editor-in-chief, John Nicholthwaite, is having a conversation with President Zelensky. That is going to be highly watched. Zelensky did give a speech yesterday where he was surprisingly quite critical of Europe and criticized Europe's policy of being too dependent on Russian gas, saying European countries have to completely wean themselves off Russian gas and increase defense spending. So that's probably music to President Trump's ears and what President Trump would want to be hearing. So the relationship between Zelensky and Trump is also going to be an interesting evolution over the next couple of months. From the Middle East standpoint, the conversations that we've been having, I would say, are rather optimistic for a change. You're so used to me reporting on the horrors of the past year, but given the ceasefire news, the ceasefire that is still outstanding between Israel and Lebanon as well, not just Israel and Hamas, there is this mood of perhaps cautious optimism in the region.
Giovanna, thank you so much for being with us. We're going to be Giovanna Bossetti right from Davos. We can go there live now for the beginning of the conversation between John Nicholthwaite and the UK Chancellor Rachel Reeves and Joachim Gauck. Have a listen.
The biggest, the most obvious is Donald Trump's inauguration. He's already kicked off with tariffs on Canada and Mexico. Now he's talking about China. So Britain is an unusually open economy. I think we're arguing about the numbers downstairs, but by some counts, 60% of trade equivalent to 60% of GDP. And so my question is, how vulnerable are we to this, especially given the fact that we've already come out of the European Union? One of you. Your trade. Good morning, everyone. It's, yeah, I mean, going around Davos, making eye contact with all your trade ministerial counterparts, you can imagine what is on our minds, right? And no conversation. But I think, well, a few things on this. First of all, yes, the UK is a very globally orientated, trade-intensive economy, and that is a good thing. That openness to the rest of the world will be championed by this government, and actually there are opportunities to expand on that. I think that's a unique selling point in terms of our relationship with the Gulf and the trade deal we're negotiating, our aspirations with India, the EU reset, hopefully maybe some things with the US that come out of this, the China engagement that you have kicked off, Chancellor. So, yes, there's a vulnerability there. There's a strength that comes from that openness to the world as well, so let's recognise that. And the second thing is that we understand there is a genuine analysis in the US that feels that the very big trade deficits in goods that the US has, both with the EU and with China, the sense of unfairness that is the proof point of, we understand that. We might disagree, but we'll engage with that. Now, you're right to say we are an incredibly globally orientated economy, but also we obviously don't have that trade, the US does not have that trade deficit on manufactured goods with the UK. Amusingly, I said this to the Cabinet last week, But the UK and the US actually believe we have a surplus of each other own goods.
Yes.
It doesn't have asymmetric statistical growth. So there's the basis for a conversation there as to the future. But, you know, it will be a tricky time to be a trade minister. There's no doubt about that. But our job is to navigate through that. You don't get to pick the world as you want it to be. You get the world as it is. And I do believe, you know, the unique pitch from the United Kingdom can be, first of all, a return to political stability, which you appreciate after the Brexit referendum has been challenging in the UK. But that's also relative to some other European countries as well. That pitch to openness, and then I know something you want to get into, which is the willingness of this new government to use this mandate, to use the opportunity we have to fundamentally improve the business and investor environment in the UK.
So can I come on to that straight away? Because another piece of news is overnight you got rid of the chairman of the Competition and Markets Authority, and people conceive that as being a pro-growth, pro-deregulation, because one of the things about Trump is, yes, business people at Davos are scared of his trade wars, but they do like the pro-growth, deregulatory side of Trump. Is this a sign of more things to come in terms of regulation?
Well, growth is the number one mission of this new Labour government. 6 months in, we're building the foundations to deliver that strong growth that has eluded the UK for far too long, more than a decade of very slow, sluggish economic growth. And we want our regulators to be part of that growth mission. Now, of course, the regulators are independent, and the chair of the CMA decided to step down. But he recognised that this government have got a different strategic approach when it comes to regulation. And he recognised there was time for him to move on and make way for somebody who does share the mission and the strategic direction this government are taking. So we wrote, myself, Johnny, the Prime Minister, to all of the regulators, more than 100 regulators in the UK, written to all of them and said, what can you do to reorientate your organisation to regulate, not just for risk, of course regulating for risk is important, but regulating for growth. I've done it with the financial services regulators, we've now done it with all of the regulators. I've got to say, the responses we've had, a lot of them have been incredibly positive about things that they can do.
Would you, on financial services, you just mentioned that, would you ever consider ring fencing? You know, we are unusual in Britain in the sense we've ring-fenced banks. We've said, look, you have to put your retail banks separate. In an era where Trump and other people are pushing over deregulation and lots of funds, is that an area you would also look? You just mentioned financial services.
We'll always keep an open mind about things. Already, since the election of President Trump, the PRA, Prudential Regulator, has pushed back the implementation for Basel III. So that was going to be January 2026. We've pushed that back for a year. We're ahead of the European Union in recognising that the world has changed, and so we've put back that date. I think that shows that our regulators are willing to be pragmatic, recognise the importance of attracting investment into the UK, not being out of kilter with our major trading partners and our major competitors. So I think you've already seen that. We saw the letter from the Financial Conduct Authority to the government just last week about what they might be able to do to drive investment, drive growth in the UK, with a number of practical proposals. That's what this government wants to implement, practical things to make it easier to invest in Britain, make it easier to get things done in Britain, because that's how we drive growth.
There's another very good example of that, which is my third piece of news, which people are talking about, is the idea that next week, there's a leak ahead of it, that you would say, go ahead with the third runway at Heathrow, go ahead with the expansion gap, maybe the bridge over the Thames as well. That would be a sign you're prepared to take tough decisions that help growth.
We've already taken a number of big decisions on City Airport, on Stansted Airport, on a number of planning decisions that this government has called in that were on the desks of ministers in the previous, on housing, on data centres, in the creative industries. I'm not going to sort of comment on speculation about what I may or may not say next week, but Johnny started with a sort of pitch that Britain is an open, trading, vibrant economy. We want to remain as such.
To use your example of taking tough decisions, if you push ahead with Heathrow, that might cause problems with Sleepcar, it might cause problems with your colleague Ed Miliband.
This is the problem with the last government. there was always somebody that said, oh, we have to pull forward to grow the economy, but we don't like that investment, or we don't like that wind farm, we don't like those pylons, we don't like that airport, we don't want that housing near us. The answer can't always be no. And that's been a problem in Britain for a long time, that when there was a choice between something that would grow the economy and sort of anything else always won. Now, of course, there are other things that matter, but when we say that growth is the #1 mission of this government, we mean it, and that means it trumps other things, and so we're making pro-growth decisions in the national interest.
I feel that, so I genuinely feel there is, in the UK, and perception in the UK, at the minute, people haven't quite recognised how resolved this group of people in the cabinet in the UK are to make these decisions, to make a difference, right? And I know that the proof points of that are not what we say or what strategies we publish, but the kind of decisions that we seek to make. But when Rachel says growth #1 mission, that's about attracting private capital to the UK. That's about getting things done more quickly. There are things we know the UK needs. I mean, look, we could all tell stories of UK infrastructure that, is a famous example of the M6 tunnel was sort of initiated under the Callaghan government, delivered by the Blair Labour government. We've got to do things quicker and better. And I think people don't yet quite appreciate how resolved we are to do that.
Isn't that, and to come to the point, isn't that to do with, in some ways, the budget? I mean, if you talk to people here, they will come up with a variety of complaints. They'll talk about fiscal headroom, which we'll come back to. But their basic point with the budget was they thought that came across as something that was not in favour of wealth creation. The heart of it had big pay rises for public sector workers, paid for big taxes on business. And that is the main thing when you wander around the halls of Davos, you just come back from New York, that you seem to have started on the foot of being people who are not pro-business. So it's not just to do with these past decisions to do with Conservatives, it's to do with that particular thing with the budget. And do you wish you'd done things different with that?
When I became Chancellor, there was this £22 billion gap between what the previous government were bringing in revenues this year and what they were spending. It wasn't some years in the future, it was an in-year gap that hadn't been disclosed to the independent forecasters, hadn't been disclosed to Parliament. You had an idea of it, because if you looked at the monthly borrowing numbers, every month it was coming in $1 billion or two above what the independent forecaster had suggested the government would be borrowing on a monthly basis. But until we were elected, we did not know the scale of that inheritance. Now, I said during the election campaign I would never pay fast and loose to the public finances. Liz Truss did that, the previous government did that, and it caused untold damage in terms of borrowing costs and confidence in the UK. So I had to get a grip of the public finances. And that did mean difficult decisions actually on welfare, on spending and on taxation to get the public finances under control. And I strongly believe, and I think businesses instinctively know this too, that stability is a prerequisite for economic growth. You can't grow an economy unless you have that stability. So we've now wiped the slate clean under the sort of economic and fiscal mismanagement of the previous government. It did require difficult decisions. I'm not immune to the challenges posed by the increases in tax. But let's look at the alternative. The alternative was that I did half measures, and then everyone would know that I have to come back for more next year, or I swept things under the carpet and pretend those problems didn't exist, but they would reassert themselves at some stage. What businesses can know is that our public finances are now in order. We're never going to have to come back again and do a budget like that. So we have the stability upon which we can now build as a government.
There's a limit though how much you can blame back on the Tories. I don't think anyone here regrets the Tories going. But you look at the numbers, the British Chambers of Commerce said that British business confidence is its lowest ebb since Liz Truss's mini-budget. 2/3 are worried about tax. Half say they have to raise prices. Firms are already cutting back on investment and employment. The British economy is actually smaller now than when the Tories left.
You've given the bad news. Let me tell you two pieces of good news. PwC survey that came out on Monday whilst we were here in Davos showed that we are second to the UK as a place to invest for global CEOs. That is the first time in 28 years to the US. It's the first time in 28 years that Britain has been in that position. That is good news and is a vote of confidence in the UK. The IMF forecast that came out last Friday revised up growth for the UK this year and puts us top of the pack of the major European economies. So we can trade surveys and data, but I'm here to sell Britain, to talk about the strengths and what we are doing. We're reforming the planning system, we're reforming our regulatory system, reforming pensions, and also this year we're going to be publishing an immigration white paper. And although we know that we need to bring immigration down, particularly illegal immigration, into the UK, we are going to look again at routes for the highest skilled people, visas particularly in areas like AI and life sciences, because Britain is open for business, we are open for talent, we've got some of the best universities, some of the best entrepreneurs in the world, but we also want to bring in global talent into Britain.
There's no complacency by any of us. I would say the challenge of our inheritance has made us even more resolved to do those things that Rachel has described, because we wanted to do them, we thought they were essential. I think that case is even more compelling as a result of what we have inherited. It comes back to this: people should not doubt how resolved we are to make a difference. It's not just about the economic performance, what it means for our constituents, of course that's important. It's also about, to be honest, the legitimacy of the political system, showing people that government can make a difference to their lives, avoiding some of the populist pressures which are evident and discussed quite widely at an event like this. We know what's at stake, and that's why we're going to do it.
Do you, on this issue here again and again from people here, this issue of wealth creation, I just saw Tony Blair walking on the street. He was famously relaxed about wealth creators getting wealthier. So listen to people here, they'll say taxes, well, taxes on business, taxes on wealth, taxes on school fees. You've got small businesses spending all their time now worrying about inheritance tax. Non-doms complain and say, oh, Rachel leaves, not Rachel Reeves, because they're heading abroad. The record of left of centre governments that are unpopular with business or start on the wrong terms with business is not a good one. You think of François Hollande in France. There is a problem there. Beyond sort of announcing some things around the edge, what are you going to do to change that idea that is out there at the moment that you're not in favour of wealth creation? Maybe you could correct that now. Are you relaxed about wealth creation?
Oh, absolutely. And we want, as I just said, the best talent, the best people to come to Britain, create jobs in Britain to grow our economy. We had an international investment summit 2 months into the Labour government, £63 billion of inward investment into the UK, primarily in AI and in clean energy. That is incredibly exciting and shows the strength that we have as an economy. I'm not going to apologise for the budget, because although I hear criticism, what I don't hear is any real alternatives. If you're a CEO or a CFO and you're coming into a new business and you've got these massive problems with your finances, you have to stabilise them. And that requires difficult decisions. But if you don't make those decisions, you're going to be plagued by them for years to come. So we have now wiped the slate clean. Businesses can be confident of that. My instinct is to have lower taxes, less regulation, make it easier for businesses to do business. But unless you can have that economic and fiscal stability, then, to be honest, I think that you're not going to have any serious plan for economic growth. We saw that under the previous government. We've seen that in governments around the world that get into financial difficulty. We have avoided that through the difficult decisions that we've made. But on every other area, I think businesses will say, regulation on planning, on pensions, on capital markets reform, that we are doing the things that are needed to unlock economic growth.
We'll come back to the issues of other things you could do in a second with Johnny, but first with you, this particular issue of stability and the issue, as you know, about fiscal headroom. You left yourself a very small kind of buffer. I looked at 0.3% of GDP, or to put it another way, that's $9.9 billion, £9.9 billion against total public spending of more than 1.3 trillion. So very little margin for error. You've seen all those moves in the bond markets, which you'll point out have been corrected, but each time that happens, it kind of pushes through the buffer. Are you at some point going to have to make a bigger buffer at some time?
I set out the two fiscal rules that this government will meet. The first is that we will pay for day-to-day spending through tax receipts. Previous government didn't achieve that in 14 years. And that we will bring debt down as a share of GDP. We meet those rules 2 years early. We meet both of those in year 3 of the forecast at the moment. And in the final year of the forecast, there's a £9.9 billion amount of headroom. That is more headroom than we inherited from the previous government. We actually put more money into increasing that.
Theirs was a famously small amount as well.
Yeah, so it's tight. And those fiscal rules are important to us because they are the sort of bedrock or foundation of that stability that I've spoken about. So we will continue to make decisions to ensure that we meet those fiscal rules. And just another thing about the fiscal rules and why we chose to pay for day-to-day spending through tax receipts. That is so important for this government to get a good day-to-day spending because that allows us to free up money to invest in capital infrastructure projects, whether that is energy or transport or in tech, compute capability, for example. And we're only able to unlock £100 billion during the course of this Parliament for those capital projects, additional £100 billion, because this government are getting a grip of day-to-day spending. And some of you would have heard our Chief Secretary to the Treasury, Darren Jones, and our Science and Innovation Secretary, Peter Kyle, yesterday, speak about the possibilities that tech have to transform our public services, to get better value for the money that we put into them by using tech better. The creation of a government digital app that will have our driving licenses on and other things by the end of this year, using tech to cut out some of the costs in the back office functions of government. The more costs we can take out, the less we have to do on the tax side, the better services we will deliver for citizens, and the more we can free up to invest in that capital, the projects that can help transform our economy.
That's if you're going down the same route as Elon Musk with his Department of Government Efficiency.
Well, look, we want to root out waste in government spending. I think maybe the comparison.
Just one last thing about the fiscal headroom. You've got Office of Budget Responsibilities forecast updates at the end of March 26th. So my question is, can you leave it that long? If you're riding a bicycle and you hit the curb twice, you tend to move a bit closer to the centre of the road, don't you? You've already had 2 instances where the sheer rise in borrowing costs, which occasionally happens, could have wiped out that buffer. Isn't that something you're going to have to deal with eventually?
Well, there have been undoubtedly global movements in financial markets this year, mainly driven by the US, but of course the UK gets caught in those headwinds. The Office of Budget Responsibility are just starting their forecast process, and they don't take into account just 1 week's moves in financial markets. They look at a period of time. But I don't think we should get ahead of ourselves. There's a couple of months before that OBR forecast is published. I will respond to that in the proper way and make sure that we continue to meet those fiscal rules.
So can I kind of come to you on the issue of growth again? It strikes me, you look at a lot of the things you've been talking about, that the Chancellor's been talking about, planning reform, infrastructure strategy, pensions reform, making regulators more friendly. Those are quite kind of long-term things, whilst what business is looking for desperately is something short-term to make up for the tax rises. Is there anything you particularly can sort of focus on there? I would come back a little bit on that, John, because I think what business wants to fundamentally see from us is, are we good for our work? When we say growth's the mission, how are we going to prove that? How are we going to convince people that that is absolutely where our political priorities will lie? Exactly as Rachel has said, they've heard from other people, other governments in the past. They want to know when you get that countervailing pressure, well, what about this, what about that person not liking it? Are we going to say, no, this is the mission and this is the imperative? And we are. So I don't think it's about people just banking the long term, because the one thing the UK has needed in the last few years is more of a long-term serious focus. Let's be frank. We've been bobbing along from one Prime Minister to the next, sometimes month to month, right? So they want that long-term focus, and I think that's where you get the confidence. If people do not look at the UK, they risk missing out, right? that's genuinely the case, because this is a government so resolved to make the difference, because we know that is what we have to do. So I don't think it's a question of, you know, okay, people think the long term is great, they want the short term. They want to see that long term following through and the commitment that comes with that, and then they will see when, you know, some of the pressures, some of the conversations about the global trading position, the leadership role the UK will take in terms of open markets being a key part of that. I mean, as we both said, we want to stress, we recognise the challenge of our inheritance and how we've got to, you know, provide people with the confidence and the certainty for the future. It is important to say we're still, you know, you benchmark, you know, payroll taxation in the UK is still very internationally competitive. Capital gains tax, corporation tax laws in the G7 with, you know, the best allowances available. So there's a compelling competitive offer there. But what you need, I think, to generate that confidence is people recognising this is something serious about it.
Surely the single thing that you could do that would change the most amount of growth is to do a fresh deal with Europe. To do something like a customs union. That's what actually every number that people have run on that shows the biggest increase in GDP compared with all the other things you're talking about.
It's first of all, will this debate ever end? I mean, I think about
rejoining the European Union. Is there something akin to
I would say something like this. That first of all, we want, and again, there's a high degree of ambition on our side, if we set up that relationship with Europe. And there's a whole range of specific elements to that, the SPS proposals, the recognition of mutual recognition of qualifications, the regulation of goods in particular. We're up for an ambitious conversation about that. I do think, again, people must fail to recognise that, you know, the evident problems, the challenges of leaving the European Union from the UK were obviously about a significant change in our terms of trade, but the political uncertainty that came with that was also a real problem. And so our decision to not relive, not to refight those arguments, but to focus on improving that relationship, practical things, as well as build those relationships with the Gulf, with India, maybe with the US, look at how we've been an outlier in terms of our lack of engagement with China, how can we, you know, turn some of that around, difficult but important to do. But I think that is a much more comprehensive approach, and I think you've got